Good morning, everybody. How you doing today? I'm a few minutes early. Sorry. Good morning, D. Good morning, Trading Book. Erla, nice to see you. How's everybody's morning? Did you guys see that news? Was anybody sitting in front of the computer and said, "Oh my gosh, I'm so glad I wasn't trading in front of that"? That was some crazy, crazy news. But you know what? And guys, there's things that make me proud. And there's things that amaze me every day. And I dropped this picture in the room, guys. If you look at the timestamps, it's 8:31 and 10 seconds for the majority of this screen. And price went straight to one-to-ones. It bounced off of a fib. The next fib went up to a fib and then rattled in between the fibs. And guys, I'm telling you right now, this is why I teach termination conditions in this room. This is why I tell you that you will understand where the market is likely to go. You will understand where the market is likely to stop. And man, when I see stuff like this, it floors me. Absolutely floors me. What an advantage you ladies and gentlemen have trading with this software. And all you have to do is learn some very, very basic stuff on how to read your indicators. Good morning, Mr. Flowers. Good to see you in here. Good morning, PFI. Good to see you in here. Izzy got game in here. Man. All the cool kids came back for a reunion. That's pretty cool. I like it. I just wanted to share that because, guys, it floors me. There's a point in your time with the software where you will learn to respect these key areas. You will understand that you don't want to trade into them, that it's easier when you trade from them. And that's what we're going to do today, guys. We're going to talk about simplicity a lot. We're really going to focus on the best of the best, and we're going to do it pretty systematically. You want a cool kid application? We'll see, Rob. They might deny you. You never know, man. We'll see. They denied me every year for the last 52 years, so I'm rooting for it. Guys, I check news every morning because the reality is I don't want to get caught up in that emotional response, and that's all it is. Unemployment claims don't have any bearing on my decision-making process. People have been sending me texts all week. Oh my gosh, Mark, the markets are crashing. Is this messing up all your stuff? What does this do to your job? And I'm like, my job is freaking strong right now with this volatility. My students, our clients are absolutely crushing it. The ones that have a solid plan, because one of the great things is we can make money either direction. So this unemployment claims, while yeah, it's an important number just for the strength of the country, guys, has nothing to do with our trading. The only thing that I look for news, the only reason I look for high impact, for medium impact, is because I don't want to get caught up in that emotional response, guys. That is a part of my trading plan, is to not trade 2 or 3 minutes before news and to wait for the market to settle down before I get back into the market. So I share the link every morning. We check it out every morning, and we do it because it can save you a lot of heartache, guys. When the market moves as fast as it did this morning, you can get slipped, you can get stopped out. You might have a $200 stop and find yourselves $2,000 in the hole because of the emotional response. They can't fill it. So know when news is coming. And then, guys, everything that I talk about in this room comes from the trading guide. And I love this. I say it every day. There's no secrets with Nexgen. Wild AK, I'm assuming that's Alaska. Welcome to the room. That's a new name for me. Guys, there are no secrets. There's no holding back. There's no, man, let me give them a little bit, and just when they're about to fail, I'll sell them something else. It's just not how we do it. We are 100% dedicated to giving you everything that you need to be successful with this software from day one. And I've already posted in the room, and I'll post it again when we get to the point. Every tool that I use to teach this classroom, everything that I show, that I talk about, I've put into a zip file so that you guys can have it on your computer at home. We're going to focus in the first hour And this is the first hour every hour. And thanks Trading Book yesterday because I needed someone to say, hey, Mark, don't forget to keep it simple, right? Remind everybody to keep it simple, to keep it focused. And that's exactly what we're going to do, guys. So every morning, I spend an hour, if not more, talking about one trade, talking about the entry for only one trade, for the high probability trend trade, guys. And I do this because this is a trade that typically wins 70 to 80% of the time. And this is a trade that creates an enormous amount of confidence through the memory of success. But most importantly, guys, and I can't stress this enough, this is a trade that if you take the time to keep it simple, to learn this one trade, you're going to be a chart reader. You're going to be able to look at your indicators and you're going to understand where the market is likely to continue, where the market is likely to go, where the market is likely to stop. And guys, when I talk about areas where the market is likely to stop, this is one of the most valuable things that Nexgen can do for you, these key Fibonacci areas, is you're going to know exactly where the people that make the decisions in the market are going to have a reaction, where these fights are going to happen. Good morning, Adriana. And we're just going to give you a simple plan that teaches you to take advantage of a couple simple things, to avoid those key areas, trade from those key areas, and we're going to give you a plan that's going to give you the potential to be profitable right out of the gates, guys. Chart reading is the goal. Chart reading, not day trading, not in the beginning. We're just chart readers. We're learning to nail this entry, guys, because chart reading is 90% of your day. It is 90% of your day. If you spend 6 hours in front of your computer, you're going to trade maybe 36 minutes. And I know that that seems weird, right? But how am I going to make money if I'm not active? It's not that you won't have the potential to make money, the capabilities of making money, guys. It's that you won't be arbitrarily throwing money away without advantages. And that's what we're going to focus on, is we're going to focus on advantages. And we do it with this high probability trend trade because, again, going right back to simplicity, this high probability trend trade is only 3 rules. That's it. It is 3 rules. Each rule creates an advantage, guys. And the recipe for a trade for the brand new user is momentum, a clear path, and an entry area. It's only 3 little things to get you into the market, to give you these advantages. And you know what? I'm going to pull up the slideshow and do it this way. Dun, dun, dun. Good morning, Zorro. Dun, dun, dun. There they are. There's those 3 rules. These 3 rules, guys, and these advantages that they create. And I want you to write this down on a piece of paper. I want you to text your wife and tell her that this is what you're going to do. Your job for the first 20 days, first 20 trading days with me, is to learn how to speak to yourself in terms of these advantages. To look at your chart and ask yourself out loud, scare the dog, do I have momentum? Is there a clear path? And if so, let me go find an entry area. And this is it. And you're going to want to add a million things to it, but there's just no reason to. These 3 rules that we're going to cover in depth happen on only 2 charts. That's it. And even more specifically, the most current bar on the large chart, guys. Your large chart leads the way. Large chart is the reason that you'll ever look for an entry. And the large chart is going to define the direction of the market. If the background on the large chart is green, the market's going up, let's go up with it. Let's go in the direction of the trend. The large chart is going to define momentum through rule number 1. And we're going to break these rules down individually, what they look like and what they mean to you. And the large chart is going to be able to define these key areas where the market may stop, where the market needs to break to take a trade that may reverse the market. And it's going to do that through rule number 2. And your first 2 rules, 66% of your advantages come from the first bar, the most current price bar on the large chart. And then once you have these advantages in place, guys, we're going to go to what's a smaller, faster chart. And this is your refinement chart. If the large chart's a broad stroke of a brush, it's slow moving. It's tough to see change on it because it's not a fast moving chart. We're going to take the inner workings of one of these bars and we're going to refine it on the small chart. It's going to break it down like an x-ray into 20 or 30 bars, and you're going to be able to pinpoint exactly where the market is most likely to continue. You're going to be able to use this spot for entry. It's going to allow you to reduce your risk. It will increase your profit potential, guys. And that's what rule number 3 is designed to do, is to get you into the market. So these two charts are a reflection of the people in charge. And who do you want to trade with, right? The large crowd, the men and women with the deep pockets, the institutional traders, the folks that when they wake up in the morning, they go, you know what, I think I want the market to go up. They have the means to make it go up. These are the people that are defining the direction. These are the people that are creating that momentum. These are the people that are reacting to those key areas that you're going to know about long before you get to. And guys, the large crowd, the large chart leads the way. And the path of least resistance, especially for traders of our size, is to just go with the flow. Let the large crowd tell you what's happening, and then just try to catch a little piece of whatever they're doing. That's how we do this. The small chart, your entry chart, guys, this is a refinement chart. This is taking the inner workings of just one bar, and there's this small crowd that still has more money than you or I, but they have just enough behind them to create a ripple, a little fluctuation, a pullback. But these guys fail 70 to 80% of the time. And they're not in it to win it forever. They're just trying to take a little shove, disrupt the system. And guys, we know exactly where they're most likely to fail. And that's where your entry rules are going to come in. You're going to be able to pinpoint their failure point. That is where you're going to enter the market to go with the large crowd. And since they fail 70 to 80% of the time, it means that being on the opposite side of their efforts, you're going to have the potential to win 70 to 80% of the time. So it's only 3 rules, and it's only 2 charts. And guys, I say 3 rules every day, but I'm going to tell you right now, and I mean this 100%. Once you can identify momentum, and I promise you, if you're brand new today, you're going to understand the look of momentum by the end of the day tomorrow, and you'll be good and confident with it. And then once you understand a clear path, and knowing how to define it isn't difficult, learning to trust it takes some time, because it means that you have to stay out of trades. Once you can identify these 2, you have everything that you need to create a trading plan that can bring you success. You have everything that you need to take advantage of the market. Initially, rule number 3 is just designed to get you in at the best of the best spot for this high probability trend trade. But guys, there's a million ways to do it. This high probability trend trade is not your only trade. This high probability trend trade is going to be your first trade. This is your foundation. This is the one that's going to teach you to read your indicators, and I'm going to encourage you to keep it as focused on the high probability trend trade as you can possibly keep it focused. Try not to stray beyond. And there's a path to getting to where you want to be. And I do this every day. And I decided this morning I'm going to revamp the spreadsheet. I'll give you mine today, but I'm going to make some changes today to it. Post in the room. You'll notice if you're looking at the chat box right now that Adriana, Paul, Chef, they've all posted links in the room. And they've been here long enough they know that I'm going to spend the first hour talking about rules, guys. So if you have a question about rules, post that question in the room. And then the second and third hours of this classroom are dedicated to looking at everything you do. Every time you post a trade in the room, you need to tell me, why did you do what you do, Adriana? What were you looking at? What were the conditions that made you want to take this beautiful entry and get paid? And why did you choose to go long against 3 divergences, right? So Adriana, we're going to talk about your charts when I get there. But guys, one of the best things you can do for me, tell me why. Tell me why you did what you did. Tell me what you saw. Tell me what was going on in your mind. Tell me what your chart read is. Because the reality is this class is designed to get you to read your charts. And if you don't tell me what you see, and if I only tell you what I see, well then you better be able to tap into my brain every time you take a trade. And most people can't do that. So writing about the 3 rules, guys, that's a huge advantage to getting to where you want to be, because you begin to associate these looks with the rules and the advantages they give. Every time you show me your entry and tell me why, maybe we can find a better entry, a lower risk entry, a higher profitable entry. So every time you post in the room, we're going to turn it into a lesson. And not just a lesson for you, a lesson for the entire class, guys. So anytime somebody posts in this room, you should be thankful because they may be teaching you something. And I'm going to use your chart. Guys, don't force me to be the one that reads your charts. Start forcing yourself to look at your charts and speak to yourself in 3 simple terms: momentum, a path, and an entry area. And that's what we're going to do today, guys. We're going to start on rule number 1 because it seems appropriate. Good morning, Kenan. And rule number 1 says that I must have strong trigger lines, guys. What the hell's a trigger line? I don't know. A trigger line's a moving average. That's all it is. It's these solid lines, which are your small triggers, and these dashed lines, which are your large triggers. All you need to know about these lines is that these are small and these are large, and these are small and these are large. And they're going to work together to define the momentum and the trend, guys. And it's pretty simple. When the background is green, the market's going up, and you're in an uptrend, you should only be looking for rules to be met for high probability trend trades long. When your small triggers, the solid lines, separate, break above the large trigger lines, which have to be wide and angled in the direction of the trend, that separation lets me know that the odds are favorable for the market to continue up. Odds favorable momentum, ladies and gentlemen. You're going to hear that all day in the room. You're going to see it annotated on charts, OFM. In a downtrend, when the background is red, the small triggers break below the large triggers. The large triggers need to be wide and angled in the direction of the trend. Guys, there is no strength in flat triggers. Wide in the direction of the trend, and that separation between the two lets me know that the odds are favorable for the market to continue down. And guys, this odds favorable momentum, these strong trigger lines, these are what push the market in the direction of the trend. This look has the potential to break those key Fibonacci areas. This look can even cover up some of the mistakes that you guys make when you're learning the software. So odds favorable momentum leads the way. Guys, it's not difficult to recognize. When there's a separation between the small and the large, guess what? You have strong triggers. And what's cool is when you have strong triggers, you might see a tail on a large chart. Guys, that tail is the small crowd fight, and you guys are going to be able to pinpoint exactly where that tail is most likely to form, and that's actually going to become your entry for the highest probability trend trade. Not on a large chart, this thing's too slow, but on a small chart you will be able to pinpoint exactly where that tail was most likely to form. You'll be able to pinpoint exactly where that tail was most likely to form. And guys, the idea is that strength leads the way, that strength pushes the market, that strength is the reason that it goes to those next key areas. So is everybody good? Rule number 1, strong triggers, separation between the small and the large. Guys, this is enough. There are trading plans that are based only on momentum. And momentum goes away. And when the momentum goes away, your advantage goes away. Guys, don't be afraid to give me a why in the room every now and then. When your small triggers work their way back inside of the large triggers, when the small triggers enter the large triggers, this is a weakening of the large triggers. And when I weaken the large triggers, anything can happen up or down. And guys, I'm a big fan of language. You know that if you've been with me. Odds favorable. Wow, that feels good. Anything can happen. Son of a gun, it's just a crapshoot at this point. Guys, rule number 1 is not difficult to identify. Rule number 1 happens on the most current bar. You'll see that separation on the most current bar. Rule number 1 is the only reason when it's met that you're going to start looking for rule number 2. And rule number 2 says no termination conditions. None of those key areas that are likely to stop the market. Guys, 27 years ago, actually probably closer to 30 years ago, John Novak used to work with a client, and they would wake up early every morning, and they would measure by hand Fibonacci retracements, and they would have 5 or 6 lines, and they would use these lines for support or resistance. Well, John Novak, if you've ever talked to him, you know that he's happy but never satisfied. He said, what if I could automate this arduous task of creating Fibonacci. And he created a program and an algorithm that measured every swing in the market, that measured every up, every down. It did it historically, it projected forward, it created synthetic time frames, and it was so efficient that from thousands and thousands of calculations, guys, from thousands of calculations, your software can create these Fibonacci levels. And guys, the people that move the market react to these key Fibonacci levels. So when we talk about termination conditions, we're talking about an area that may stop the market. May. We're talking about avoiding them so that we have room to profit targets. And we're going to call this a clear path, guys. And when you have a clear path and you couple it with momentum, that's like being in the driver's seat of a 100-ton semi doing 150 miles an hour down I-10. And you just can't stop it. It's amazing. So the areas that we're going to look for that may mess up our good time, the lines on a large chart that may stop the market, guys. We're going to look for divergence highs. We're going to look for divergence lows. We're going to look for Fibonacci resistance, Fibonacci support, and we're going to look for yellow one-to-ones. And guys, I'm going to give you this picture because one of the things that you should do is memorize these lines. You don't have to know how they came to be. You don't have to know why they are what they are. All you need to know is that they may stop the market. That's it. Identify them as lines. Don't rank them. Don't make one stronger than the other. But know that this is where decisions are being made, guys. So if a decision can be made at a line, and I probably need to change this picture, if price comes up and it reaches Fibonacci resistance, the people in charge, the large crowd, are inclined to make a decision, guys. And the buyers may jump ship and sellers may enter. There may be a fight. And the reality is, and this is the part that bugs people, because we're all control freaks, right? We're all alpha males and females, is you don't know what their reaction's going to be. They don't send out a memo. They don't put it up in Times Square, guys. You don't know if this area is going to break, if it's going to hold, if it's going to reverse the market, or if a couple deep pocket yahoos are going to fight for the next hour. So just accept it and say to yourself, I don't know what's going to happen, but if price reaches this area and my triggers remain below, I won't take any trades into that area. My trigger lines tell me by being below resistance that this is an area that may stop the market. If the sellers take over, they push down, they're cranking, and they reach an area of support and the triggers remain above, this is an area that may stop the market. This is an area that may create an untradeable bounce. This is an area that you shouldn't take short trades into. Because when you trade in determination conditions, more often than not, you are separated from your money. More often than not. What does that mean? That means that if you flip a coin, and if heads is it kills your money, and tails is you win, guys, it's going to be heads more often than tails, which means that you no longer have an advantage. So price reaches an area, triggers remain above support, below resistance, don't trade into it. And if we go back to this large chart, I have a feeling we'll see a couple instances where support holds, where resistance holds, where these yellow one-to-ones hold, where a divergence high holds. Look at how the market rattles in between key areas. Guys, you know about these areas before you ever get to them. And all you have to do is accept that if the triggers are below resistance or above support, it's okay to sit on your hands and do nothing. But eventually, these areas break. Okay, Adriana, yeah, we are going high definition. So when I talk about yours, there's some good lessons on it. And then if you have any questions, don't be afraid to reach out to me. Guys, the areas don't always hold. Areas break all the time. If they don't, then we would be caught in a range forever, right? So when is an area broken? Well, price reaches Fibonacci support. The triggers don't break yet, and in the moment, this is a termination, guys. Sit on your hands, do nothing. It's okay. If your small triggers, both lines of the small triggers, and your large triggers, both lines of the large triggers, get to the other side of support. Support is now broken and your path is going to be clear until you hit the next line. And when you hit the next line, you're going to start the process all over. Where are my triggers? When the small triggers, both lines of the small and both lines of the large get above resistance, the path is clear. And the path remains clear until you hit the next line. And the cool thing is that when support breaks, it behaves as resistance. And when resistance breaks, it behaves as support. It's a pretty cool phenomenon. So keep it simple in the beginning. You either have a clear path or you don't, guys. And we're focusing on this advantage because decisions are made at these key areas. And when you get caught up into them, you get caught in the middle of that fight. So is everybody good? That's about as basic as I can make it. The triggers are below resistance. There is no clear path. When the small and large get above, the path is clear. It acts as support. And look at that odds favorable momentum. And look at that tail. And I bet you somebody's going to show me where they made some money off that tail. I would guarantee it, knowing my students. Somebody's going to show me an entry on a smaller, faster chart where they were able to capitalize on this look. So guys, that's your basic. And the basic, your ability to read charts is going to open doors. You're going to see so many opportunities. And the first opportunity that you're going to be able to capitalize on is the second trade that I teach. And this one says that when your small triggers smash through an area, 50% of my triggers get below the area, but my large triggers are lagging behind, 50% remain above. This 50-50 look means, as long as I have odds favorable momentum, that this area has the potential to break. But guys, it's nothing more than potential. It won't be broken until the small and large get through. But these potential to break looks are probably going to be the trade that you take more than any other. So I'm going to give you a recipe to take them, but you've got to understand the recipe for a termination and a clear path, and you have to understand that this is caught somewhere in between the two, that potential to break. And this will be the second trade that you guys really start to take. And again, I will give you a rock solid plan to have the highest chance of success with it. And that's rule number 2, guys. That's lines on a large chart. And let me go back to this. Lines on the large chart, right? Lines on the large chart can stop the market. Lines on the large chart can create an untradeable bounce. Lines on the large chart. I say that a lot, right? Lines on a large chart. I don't care what the line is. It can be problematic. We're going to use lines on the small chart for entry. And rule number 2 is a large chart thing first. Rule number 2 has got to be met on the large chart. When it is, and you go to look for an entry, guys, there is one time where my small chart will pump the brakes on a high probability trend trade. There is one time when I have odds favorable momentum, when I have a clear path, that I will choose not to take a trade because rule number 2 isn't met. And that's 3 divergences in the same price range. And 3 divergences means 3 loss of momentum. That's all divergence is, guys. Is price comes down, price goes up, creates a pivot. If momentum doesn't follow price, if it's lagging behind, and guys, all of this is done in the background. You don't have to do any calculations. You'll see a light blue line or a cyan line print from the bottom of that pivot. If you see it 3 times, doesn't matter what chart you're on. Doesn't matter if it's a small chart, large chart, range chart, month chart, stock chart, futures chart. 3 divergences in the same price range may terminate the trend, guys. No more short trades. 3 divergences in the same price range may terminate the trend. No more long trades. And you'll see this on a small chart when your large chart, because it's so slow, can't tell you that things are changing. Your small chart will kind of give you a heads up, guys. It becomes more powerful with those anything can happen triggers. Becomes more powerful still if it makes a little head and shoulders pattern. And that just means that the last pivot is higher than the second or lower than the second. There's your little head, number 2, and a couple shoulders. It's an old technical pattern. And guys, if everything says down and I see this, no more short trades. If everything says up and I see this, no more long trades, guys. And those are termination conditions. And termination conditions are the most broken rule among new users because termination conditions force you to be patient. 90% of your day is going to spend reading your charts, guys. 90% of your day is going to be waiting for that perfect storm where your rules are met, where the advantages are there, where you know that you're trading a pattern that wins more than it loses, which means that 90% of the day, your rules are going to keep you out of lower probability scenarios. 90% of the day, you're going to sit on your hands. You're going to play video solitaire. You're going to do something other than hope this line breaks. Something other than hope this loss of momentum pushes the market anyway. And guys, the difference between successful traders and unsuccessful traders, in my experience, this is my own personal observation. This isn't a part of the curriculum, guys. The people that can do nothing when there's nothing to do are the people that find the most success. The people that don't feel compelled to be in every move of the market are the ones that typically find the most success. The people that understand that the futures market trades billions of dollars every day and they only have to capture $400 or $500 a day to be in a six-figure income. These are the people that find the highest level of success because they don't feel the pressure to be busy. They feel the pressure to make sure that their rules are met. So that's rule number 2, guys. Rule number 2 is going to keep you out of a lot of trouble. But when you have momentum, when those strong triggers are cranking, when that path is clear, when there's nothing there to give you a bounce, guys, we're going to take advantage. We're going to find our entry, and we're going to do it on the small chart, on the faster chart. And rule number 3 says that we're going to use a limit order to buy or sell that pullback that the small crowd creates, that little shove against everything. And we're going to do it at an area. Fibs, midbands, yellow 1-to-1s. But here's the key to success, guys. We want those areas to be inside of triggers initially. I'm giving you the best of the best, the highest probability. But Mark, aren't there going to be trades where they're not inside of triggers? Of course there are. But you're not ready for that. You're not reading charts clearly enough to do that. So let's keep it simple. We're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, guys. That means that when the large chart says down, when the strength is there, when the path is clear or potential to clear, I want you to see in this one bar, we get a retracement, we get a bounce, we get a correction, right? A retracement, a bounce, and then it goes in the direction of the trade. All of this happens in one bar, and you'll notice that the momentum never changes. You'll notice that the path never changes. Guys, what we're doing is we're taking an X-ray and we're pinpointing exactly where that tail is most likely to form. This becomes your entry for the highest probability trend trade. This is how we can reduce our risk. This is how we can maximize our profit potential. And guys, 20 days focused on the best of the best entries is going to set you up to be able to read your charts and find all the other opportunities that you could ever hope for. So the one thing that you have to understand, and it's not a hard lesson, is that price returns to large triggers. That's it. How's that for easy? If my large triggers are here and price is here, price is going to feel compelled to come back and hit those large triggers. That's all it is. It happens on the large chart all the time. It happens on the small chart all the time. So what we've done to increase your accuracy, to reduce your risk, to amplify your profit potential, guys, is on your small chart, the large triggers where we expect price to correct, and the large triggers from the small chart where we expect price to correct, they're both on the small chart, your entry chart. That way, when the correction point from both charts overlaps, large triggers, synthetic means from the large chart in this case. When they overlap, two snakes riding piggyback, guys, one on top of the other, what happens is there is the least amount of guesswork. Where's the market likely to correct? Well, to the triggers. They're on top of each other. That's one spot, as opposed to the two spots. That's accuracy. And then when we put lines inside of those triggers, give the market something to bounce off of, guys, you're going to have the smallest window of opportunity, the smallest point where the market is most likely to continue. And by embracing the idea that when the large and the synthetic are one on top of the other, it's going to increase your accuracy dramatically, guys, and it's going to take a lot of the guesswork out. We had great talks about this yesterday in the room, in Traders Chat yesterday afternoon, talking about the idea that when these triggers begin to separate, it creates a lot of indecision. It can amplify risk dramatically. So what we're going to do is we're going to keep it best of the best in the very beginning. And again, I'm going to say it, you are not bound and tied to the high probability trend trade. You're not bound and tied to the best of the best looks. But doesn't it make sense as a brand new user, as you learn to read the software, as you increase your knowledge base, doesn't it make sense to give yourself the highest chance of success? Create some confidence, guys. Give yourself a plan capable of winning more than it loses while you learn to develop your own personal plan. So when the large chart says up, when the large chart has odds favorable momentum, when the large chart has no termination conditions, you may notice that I keep going back to the rules. On your small chart, everything's going to be screaming up, guys, and you're going to start getting that fear of missing out, that FOMO. You're going to say to yourself, I'm never going to make money. Everything's going. This stinks. I'm going to have to go back to McDonald's and work the fry station. And then you get the reversal bar. You get that down bar after all of these up bars, guys. And this is the beginning of the fight. This is where the small crowd has stepped up and said, you know what? To hell with the large crowd. We're going against them, and we got some money behind us. So when this reversal bar prints, guys, this is not your entry. This is the beginning of the pullback. You need to do two things. The first thing is you need to identify your favorable large triggers. Where are they? Because you know that your entry is going to come from somewhere inside of them. The triggers themselves, not my entry, but the areas inside. And it can be a fib, it can be a mid-band, it can be a yellow 1-to-1. It could be one fib, it could be one mid-band, it could be three fibs, a mid-band and a yellow 1-to-1. But the key is having an area, fibs, mid-bands, yellow 1-to-1s, inside, all caps, favorable large triggers. And guys, when you have this look, you've just pinpointed exactly where the market is most likely to continue. And when there's multiple lines, you're going to create a window, a point from the highest point of support to the lowest point of support inside of favorable large triggers. Guys, and this blue box is where the market is most likely to continue. This blue box is where I want to be in the market to go with the large crowd, with the uptrend, with the momentum, with the clear path. And the small crowd is going to try to push, guys, and we're going to meet them head on, right at the highest point of support, even a couple ticks above it. And this becomes our entry for the highest probability trend trade, because I don't expect the small crowd to be able to win against this large crowd. So I'm going to get in high. I'm not going to trip over pennies to try to save dollars. But what you have to accept is that they may push to that lower point of support, which means that you will be down in a trade. You have to be okay with that. You're still inside the window. You're still where the market is most likely to continue. And it could still bounce up from here. But 20 to 30% of the time, the small crowd is going to push price beyond the correction point. And if they do, guys, this is where stops happen. This is where I get out of the trade because my advantage is gone. And because of that, any line beyond those triggers is not a part of the equation. Any line below these triggers, whether it's large or synthetic, is beyond the window of opportunity. It's not where I expect the market to continue. At this point, my advantage is gone. And the same is true for shorts, guys. We make money both directions when we do it right. We wait for the reversal bar. When the reversal bar prints, it signals the fight, the beginning of the pullback. This is not my entry. I find my favorable large triggers, and then I search for the areas within. Fibs, midbands, yellow 1-to-1s. If there's more than one area, I'll create a window. If there's only one area, holy smokes, that's amazing. I have one point where I expect the market to bounce to continue with the trend. My limit order goes just below it. And I'm going to train myself to ignore these lines beyond the triggers because they're beyond that sounded funny, the correction point. I expect price to correct to triggers. I don't expect it to get beyond. And if it does, guys, that's not my trade. And this is where your first stop placement goes, beyond the trigger lines, 4 to 5 ticks. And you are going to be able to study this trade, to practice this trade, to go back, look at it historically, and you're going to find that you're okay getting stopped out 20 to 30% of the time, because you know through study, through simulation, through practice, that this recipe is a recipe that typically wins 70 to 80% of the time. That your trading plan is not defined by a single trade, but rather a sample of trades. And if you take this 20 to 30 times, guys, you're gonna lose 4 to 6 of them. Guaranteed. Well, not guaranteed, but more likely than not, you're gonna lose. And that's a normal part of a positive equity curve. And you're probably thinking to yourself, what kind of dumbass tells someone that's thinking about buying software that they're gonna lose? Guys, I want this to be realistic. Trading isn't a one-day event. Trading is about what you do every day, the consistency every day. Trading patterns that win more than they lose. You can define with precision where the market is likely to continue. You can understand where it shouldn't go. And guys, that's your first stop. But more often than not, you get the reversal bar in the direction of your trade, and you'll reduce your risk a couple ticks above, a couple ticks below. And this is one of the advantages that this precision gives you, this 2-chart process, is you might get into the perfect trade right at the perfect spot, and the reversal bar prints, and your risk is virtually nothing at this point, and it fails anyway. And instead of losing $200-300, you're down 40 or 50, guys. And that's what really lets, it's that 40 or $50, those smaller losses, that's what lets you capitalize on these bigger moves that happen more often than they don't. So you've got to study, you've got to practice, you've got to ask a million questions and take a lot of pictures. And the pictures that you should be taking, guys, you should be taking pictures of strong triggers. You should be taking pictures of termination conditions. And if you go back historically and you circle these tails, if it lines up with support inside of favorable large triggers, ladies and gentlemen, you have the highest probability trend trade ever. And that's exactly what you should be studying. And you can go through the spreadsheet. I didn't even open the spreadsheet today. I'm going to give you a spreadsheet today. And the first part is your trade journal. And the second is your rules, what they look like. And the third is where you're going to develop your trading plan. And this is where the pictures of your study go so that you can develop confidence. And the fourth tab is like 400 pictures of you guys being brilliant in the green section. It's that high probability trend trade entry sequence for longs and shorts. It's even going to be management, patterns that repeat themselves, and an awful lot on termination conditions. And what's pretty cool is that all you have to do is go back and study it, fill it up. And then there's pictures in the spreadsheet. These are stolen from the spreadsheet, guys. These are stolen from you guys in class. Strong triggers, price has not reached an area, there's your entry. This is your focus for 20 days. Strong triggers, price hasn't reached an area, there's my entry at an area inside of favorable large triggers. And guys, that's the best of the best. That's your high probability trend trade. That's the one that's going to create confidence, that's going to give you everything you need to become a chart reader. And I want you to see this tail. I'm going to scroll back on a small chart. Let's see if we can find it. There it is. There's my large triggers, but there's no lines in it. There's my synthetic triggers. There's the line. And guys, it came right back to the second correction point. It came right back to the area inside of the trigger, and it didn't exceed. Did anybody take this trade? Am I going to see this one when I start clicking on stuff? And it dances a little bit, and ultimately creates opportunity until we start getting multiple divergences. So guys, go back and study these. Go back and look at these trades. They happen all the time. Right now, I don't have momentum because my smalls are up and my large are down. Right now, I don't have a clear path because all of my triggers are above 1-to-1s. So right now, I'm sitting on my hands and doing nothing. But look at the market. It's moving. All of that may change in the next 2 or 3 minutes. I'm just learning to be patient. Guys, are there any questions about the high probability trend trade? I encourage you guys to keep it simple, to keep it focused, to learn it in increments. And the way I teach this class, and the reason I teach it the way I teach it, is it's designed to teach you the 3 rules on the 2 charts, guys. It's designed to get you to recognize momentum and a clear path. And once you have these 2 concepts, it's enough to create a profitable trading plan. But until you get them, I'm going to give you a plan that allows you to recognize these and take advantage of them, guys. And the fastest way to do that, the easiest way to get to where you want to be, is to use that camera. Use that camera every day. Take 1,000 pictures, guys. But in this one, I try to keep it a little more manageable. Take 25 pictures each. Strong triggers, weak triggers. Because I firmly believe that if you can identify strong triggers, right? And this goes back to using this 101 sheet. If you can identify strong triggers, well, then you should also understand what it looks like to not have your rule met. And if you can identify a clear path, then you need to understand what it looks like to not have your rule met. So you're learning to adhere to your rules. So take 25 pictures of each, guys, and you'll never get confused about whether or not you had strength or anything can happen triggers. You'll never be confused about whether or not the path was clear, or if it was a termination, or if maybe it was one of those 50-50s. And if you go through this process, I'm telling you right now, you will become a chart reader faster. But don't just take the pictures, guys. Annotate the whys. Why is it strong? What does it mean to me? What rule does it pertain to? And I promise you, 25 pictures, if you go through, we took this one yesterday, I think, together as a class. Smalls above the large, space between, rule 1 met, odds favorable, momentum strong triggered. I'm never going to miss this look. Smalls below the large, space between, rule 1 met, odds favorable, momentum strong triggers. I'm never going to confuse this, guys. I'm always going to know what this looks like. And then, of course, I've got to be able to say to myself, smalls inside of the large, weakness, anything can happen. Look at the reversal. Smalls inside of the large, weakness, anything can happen. Look at the bounce. So I'm developing trust right from the get-go. I'm developing trust in the idea that these advantages are going to get me where I want to be. And as you're learning to be a chart reader, guys, I'm also going to give you this. This is the trend trade checklist. The first page it's the same thing 4 times. These are the rules for the high probability trend trade. This is what you need to see. And it's these 3: odds favorable, no termination, area inside of favorable large triggers. It incorporates another one. And this is the market coming from a strong top or bottom? Is it coming from one of those termination conditions that reverse the market? If it is, it's warm fuzzy feelings, guys. That's what it is. It increases the likelihood of success. It is not mandatory, and I put the note in there. You can take it without it, but you're going to manage it, right? You're going to be a little more aggressive on management. I've never had anybody mark yes to all 4 and trade this exclusively and do worse than 70% ever. Most people find themselves in the mid-80s, some in the low 90s. But what it is all this does is define an entry, guys. This doesn't tell you how to manage the trade. This doesn't tell you where to get out. It just tells you this is how you get in at the best of the best spot. So if you scroll to page 2, that's what it looks like to have a strong top or bottom. It's a termination that reverses the market. That's it. There's my odds favorable momentum. There's my anything can happen triggers, guys. You've got to know the difference between the 2 so that you can recognize it quickly. Price reaches, none of the triggers are through, the area is not broken, it's not a clear path. This is what it looks like when rule number 2 isn't met. This is what it looks like when they have the potential to break, and this is what it looks like when it's broken. And then defining your point of entry, defining your window of opportunity, guys, the whole process. All of this is made available to you. All you have to do is a little bit of study to learn how to make it happen, how to recognize it in the moment. And then that leads me to this final thing, guys, the KISS plan. The KISS plan is a stepping stone. This is your first trade, not your last trade, not your only trade. The KISS plan is designed to optimize your chances of success with the high probability trend trade, guys. The KISS plan is what's going to teach you to read your indicators. And the KISS plan keeps you focused on simplicity so that it becomes an easier task to learn that. The KISS plan is the best of the best, guys. And then through simulation, through study, through class feedback, through continuous practice, and this is the AI thing John Novak put in there, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, that is a fancy AI generated way of saying once you can read your charts, you're going to see 1,000 opportunities. Once you read your charts, you're going to recognize the potential to make money in places you never dreamed that you could, but you've got to focus on your chart reading first. So your simple plan for consistency: never fight the large chart. Guys, there's no reason to fight the strength on the large chart because that's what's capable of pushing the market. And there's no reason to fight termination conditions on the large chart because they may stop the market. And I'm going to show this picture one more time because I want you to believe this. The market moved, I don't know, 30 or 40 points, and my timestamp says 8:31 and 10 seconds, and my timestamp says 8:31 and 10 seconds, guys. And this entire move happened in less than a second, and it went from line to line. From a Fibonacci area at a low to the Fibonacci area at the high. Actually multiple resistance as well as one of those divergence highs. And guys, this entire move happened in less than a second from key area to key area. If you go through and study, if you go through and practice, if you just scroll back on a large chart, you're going to just convince yourself that fighting the large chart is a ridiculous thing to do. And then you're going to define your entry, guys. You're going to define the most likely spot for the market to continue, because your management plan is going to be dependent on your great entry, guys. So study it, practice it, post it in the room. Ask for help with your chart reads. Make sure that you can do this, but keep it simple. We're going to look for momentum, no terminations in an area inside of favorable large triggers. And once you define your entry, you're going to have to do something with that great entry, guys, and that's where management comes in. And once again, the magic AI phrase: you will craft a plan tailored to your personal goals based on your ability reading the indicators. Guys, the better you get at chart reading, the more your management plan is going to change. But until you're there, until you can read your charts, until you're comfortable, until those sweaty palms learn to dry up, guys, keep it as mechanical as your entries. Let your management be nothing more than if-then. If this happens, then I do this. And commit yourself in that first 20 days to not worrying about the results, but rather focusing on the process that yields the results. So your management plan is dependent on your ability to find the entry where the market is most likely to continue. And your initial stop is going to go 4 to 5 ticks beyond that window where the market shouldn't go. And you're either going to get stopped out, or all of those advantages are going to create a reversal bar in the direction of your trade. And when you get the reversal bar in the direction of your trade, this is your first opportunity to reduce risk. You're going to take that stop and you're going to put it 2 ticks above the top of that reversal bar. Or in a long trade, 2 ticks below the low of that reversal bar. And at this point, there's nothing for you to do. There's absolutely no movement that needs to happen. You can sit on your hands, roll back from your desk, and you're either going to get stopped out for a much smaller loss, or it's going to go to your first target. And guys, the targets on the KISS plan are 100% by design. 100% by design. Your first target is only $100 from your entry. That's it. $100 from your entry point. If you're a crude oil trader, it's not uncommon to catch your first target before you ever even get to make that first stop movement. Your most current bar hits that first target sometimes. And once you hit this target, there's $100 in your pocket. You start to feel a little confident. Your sweaty palms dry up. The butterflies in your stomach fly south. Guys, this $100 is an impactful $100 because it's creating the confidence in the methodology that you're trading. And then there is nothing for you to do. You're going to move your stop to break even. And you're going to say, you know what? They can get me break even. That's cool. I'm not in control of that. Or they can go to my second target. And these are my only options. And guys, your mind is going to be racing. And it's going to be telling you, protect yourself, get out of the trade, move your stops, move your targets. What if, what if, what if, what if, what if? You're learning to overcome that right now. So one or two things are going to happen. You're either going to get stopped out break even, or it's going to hit your second target. One of the things I want you to notice here, guys, in the market, first stop movement. First target's hit, your break even. Look at the fluctuation before you hit your first target. It's easy to get stopped out. It's easy to focus on these fluctuations. There was a fluctuation before you hit your second target. This is teaching you to hold fast, guys, to trust the advantages. And if it hits your second target instead of break even, guys, that's a $300 winner. That's $300 in your pocket. $300 worth of confidence. $300 that is now in your account. There's a lot of people that have the misconception that if trades aren't $500, $600, $700, $800 a pop, they have this stock mentality where I have to buy and hold forever. Guys, your precision allows you to get in and out of the market quickly. Your precision allows you to capitalize on profits quickly, to not suffer drawdowns and pullbacks. And guys, I want you to see this. This is the daily goal. There's 252 trading days in a year typically. Sometimes it's 51. If the best you ever did was $100 a day, that's $25,000 a year. That's pretty significant. We teach you, I think, pretty conservatively, this is low end, to make $500 a day, guys. $250 a contract. That's $126,000 a year. When you start getting good at it, $500 a contract is not at all unreasonable. That's $250,000 a year. And guys, one of the things that you can do is you can use these trade copiers. John Novak has programmers working on one for the new funding company right now where you can trade up to 20 accounts. And I want you to see something. This is pretty cool. So $100 a day times 252 trading days is $25,000, right? 200. That exact same $100 a day on 20 mirrored accounts is $500,000. $500,000 a year from $100 a day on 20 different accounts. Guys, is there anyone that feels like $100 a day is a lot less pressure than $1,000 a day? Yet you can still outproduce $1,000 a day by simply mirroring accounts. So that's kind of what we're doing, guys. The best of the best. Get paid. That's the goal. Get paid. And this is my first hour. And guys, this is the first hour every day. If you go back, and why not for an advanced trader trading book? Why not for someone that's been doing it 50 years? Because what happens is it just keeps getting better. Brag. Red Rob says, not bragging, but I just followed rules on the ES and made $980 in under 5 minutes. $980. One trade, Rob? I love using the calculator. Isn't that nuts? What if you mirrored on 20? Guys, that's not a horrible year from one trade. And Rob didn't have to take more trades, and he didn't have to take more contracts. He just has to have the confidence that he can make that every day and then spread it out. So guys, everything that I used to teach the room today, all of the checklists, how to study it, all of that is right here in PDF files in the zip file. Inside of that PDF file is Chart Reading 101, is your daily goal sheet that we just looked at. It's something called Exit Conditions that we're about to get. High Probability Trend Trade Checklist, the KISS plan, and also the PDF that I use put into, or the PowerPoint that I use put into PDF. So you have every picture that I use. And then Trading Book, the idea is to get real good at simplicity, and you're going to grow from it, right? Get real good at simplicity, and you're going to grow from it. And then guys, I'm also going to give you my spreadsheet. The spreadsheet that has all those pictures for you to study. The spreadsheet that has the entry rules. The spreadsheet that has the management plan. So you have every tool that you need to be successful with the software right now. And I can't stress that enough, guys. I have held nothing back. And now what we're going to do is we're going to get into the next couple hours where you're going to post in the room. I'm going to go back to the posts that you guys have made in the room. And we're going to talk about them. We're going to talk about what you see. Look at that. Weak triggers, 3 divergences in the same price range, and sure enough, the market's pushing down. All that momentum, and it just kept going up. All that momentum, and it just kept going down. And guys, terminations above and terminations below, and there's no reason to get caught in consolidation because your rules aren't met. And there's the same thing right there, keeping you patient, waiting for the best of the best. All the way up to resistance, and that's what stops it right at news, right? It's coming from support on the bottom, and that's what started the uptrend. All you're doing for 30 days is just developing a little trust in the idea that you just found the golden goose. Don't turn it into fried chicken. Keep it simple, keep it focused. Guys, I'll be back. I'm going to go take my 5 minutes. I do it every day. I firmly believe that if you keep it simple in the beginning, if you learn to talk to yourself in terms of advantages, you're going to get to where you want to be. So what I'm going to encourage you guys, and I might even insist, is that every time you post in the room, don't do anything beyond tell me what you see, right? Tell me what you see. Don't put things like ugh and damn and shoot and crap, right? They got me. Just tell me about momentum. Was it strong? Was it weak? Talk about your path. Was it clear or was it not? And then tell me where you got in and why. And if you do this, guys, that's the quickest way to get to where you want to be. Take those pictures, put them in your spreadsheet. We learn the rules. Simulate, practice, get reps, but ask for feedback on everything that you do. Because the key to success is knowing what you did right and what you did wrong, and that's where I come in. This is my job security. We simplified. Your job is to learn the looks. Guys, you have everything but experience at this point. So now let's grow the experience. You've got to keep taking pictures and asking questions so that they become easy. And Steve Diego, thank you for that. Guys, tech issues happen all the time. Eventually you'll be able to fix your own, and I think that's rad that you jumped in the room and said, hey, here's how you fix this common mistake. Because I needed that. I wasn't sure. So we're good. Guys, I'll be back in 5. When I come back and we look at your charts, 3 things are what we're going to talk about every time. 3 things. That's it. Keep it simple. You guys remember, what was that movie with Billy Crystal and the old dude? He's like, one thing, holds up his finger. And that's it. There's just one thing, guys. That's it. There's 3 things. There's really 2 things. And then a million ways to do the third. I'll see you in 5 minutes. You analyze it, Trading Book. That sounds angry the way you say that. I'll see you guys in 5. Analyze this. Was that it? No. City Slickers. City Slickers was the one. That's it. I'll see you guys in 5. All right, guys, let's get back at it. Yeah, I was on a break. Break. All right, guys, so I'm going to scroll up to the very top of the room, and I want to show you guys this. I've got to go through the chat box and get up to the top. There are times where I miss a chart, and I never intentionally miss a chart, guys. But if I do, just tell me. Go, hey, Mark, I think you missed one at 9:45, or repost it at the bottom, and I'll push you to the front of the line. And you'll be good. And you will be good, and I'll get you taken care of. I'm going to go through and start clicking links, guys. And then once I'm done, we'll look at the live market if we get a chance, and we'll have some fun and see what we can do. So 4:28 a.m., Paul comes in. Man, the early bird, right? The market is coming from a termination that rolled everything. What a beautiful, beautiful idea. Odds favorable momentum. And then that odds favorable momentum has the potential to break the area. And this is the key. It's just the potential to break the area. There's that 50-50. Paul does a great job of annotating his charts. And then the market comes back, right? And the area doesn't break. It's just potential. And here's what I want to show you guys. And this is why chart reading pays huge dividends. And this is, Paul, thank you for posting this. I'm going to turn it into a lesson that you probably don't need. When I know it's only potential, my thinking adjusts to that scenario. So guys, when I know that it's only potential, maybe I'm a little more aggressive on my management. Maybe I'm not so loose with it, if you will. So Paul gets in, right? We can see the arrows. And I want you to see that there was a reversal bar. And what a great spot to put your stop right there. It may be 28, 5 ticks. Rather than 13, all the way down here. And what it does is you say to yourself, okay, it's only the potential. They tried to go up. I can reduce my risk and I can lose 40 or 50 bucks a contract instead of losing $20 to $200 a contract, right? So it's the difference between $150 and $600 in losses. And guys, knowing what you're getting into can get you focused on the management a little bit. And really saying, this isn't perfect. I'm going to reduce my hope factor a little bit. And I'm going to say, man, if I get a reversal bar, if they try to push this way, I'm going to reduce my risk. And Paul, it's a good look. It's a great entry. Everything about it is solid. It just didn't work. And I think that you had the potential to lose a lot less money with a little bit of management on there. And then when that fails, it goes down. And then once again, we get the 50-50. Smalls below, large above. And Paul, there's a gap. There's a gap all the way back. You got to watch that. You get in, right off resistance, right at the area, and your great entry gives you room to manage. And when you get the second divergence on a 50-50, you say, I'm not giving it back. No way, not going to do it. And look how the market comes up and closes the gap to those large triggers. Price comes back to large triggers, guys. And when there's a full bar, it's likely to come back to it. And that's exactly what it did. And Paul, you took a little snippet right in the middle. Great trading, man. Nicely done. And then Rob, you lost your stops and targets here. I noticed. Do you know how to put them back? Is this guys? This is a great lesson. You're going to find yourself in trades, and you will forget to put in your stops and targets. You'll forget to set your ATM strategy, or you'll do what Rob did, and man, I've done it, where you accidentally close out your stop or targets. If that ever happens, so let's say hypothetically, I forget my stops and targets. Whoops. And it says none. And I get into a short trade because my triggers are down. And I'm like, oh my gosh, I'm not protected. I don't have any targets, guys. So I'm short. The market's going down. If I right click below, I can just buy limits. And now I have a target. And since it was going down, I can put a sell limit. Whoops, sorry. A buy stop market. Whoops, and there it goes. It just got hit. Don't trade in the termination conditions, but you can go put those in custom. You just got to drop them in. And then when one gets hit, you just close out the other one. Practice that a few times, guys, because that's a pretty important skill to have, without a doubt. And that'll help you out if you ever find yourself accidentally getting into the market. You won't panic and try to close it out. What you'll do is you'll just put in the other side of the trade, and you'll be good. All right, Erla, let's see what you're doing today. Erla says, everything is up, and everything is strong, and I get past the fibs, and you take the trade, and you're just capitalizing on momentum and the potential to break. And guys, it goes all the way up to the termination condition. What a great way. What a great way to make money with momentum in a clear path. And guys, I promise you, once you get those two concepts, life begins to get easy. Once you get those two concepts, you're going to see a million opportunities. And guys, I want to talk about why I think annotation is so important. And Miss Adriana, I'm going to use your chart for it. Thank you for the lessons. So a couple things. The first thing, guys, if you're brand new, if you take the time to identify odds favorable momentum in a clear path on every trade that you take, if you take the time to point it out, to say, look at that, I've got odds favorable, I've got a clear path, then you know what you're doing is you're developing this recognition, something that's repeatable. This is my recipe for success. And Adriana, your first entry, right at support inside of favorable large triggers. I absolutely love it. And you make $600 here. $600. Absolutely beautiful. And then when divergence prints, you get out. And here's one of the things that I notice is you get out right at support, right inside of triggers with the rules met. Isn't that interesting, guys? Don't put your stops where entries should be. If you want to get out of this trade, just get out. But that was your entry. And then the market says, hey, look, we keep giving you all of these divergences in the same price range. We're probably going to push lower. And sure enough, it did. And when I get a second lower divergence, and guys, this is a little more and a little nuance. If the large chart says up, but the small chart gives me a second lower divergence, change may be coming. It's not a termination condition, but it's enough for me to say, man, let me force it to go in the direction of the large chart, because on the small chart, not only are they losing momentum, but they can't even push as high yet. And this is where you can insist on a reversal bar for entry. And this is something that'll probably work its way into your management plan. A reason for me to exit a trade. If I'm in a long trade, a second lower divergence is reason for me to exit, and then insisting on a reversal bar if the rules are still met to get back in. And what it does is it keeps you from entering a trade against two divergences. And I'm not saying that it's a termination condition, guys. It's not in the beginning. But this is as you grow with the software. You're going to begin to recognize patterns, and it will change your plan. It will change your plan 100%. You have to know where you're going to enter and why you'll exit. And as a brand new user, you're entering because the high probability trend trade rules are true. And as a brand new user, you're using those KISS plans, and the only thing that's going to keep you from taking the trade is 3 divergences. But as you grow, as you go to the next step, as you become a chart reader, guys, there's other reasons that you're going to be able to manage trades and manage them effectively. You don't have to know them all now. But when you post them in the room, you're going to open the door for an awesome conversation, and you will become a better trader from the feedback that you receive. You will become a more confident chart reader because I'm going to point out every pattern that I have. I'm going to give you everything that I have in my arsenal to help you do great things, guys. So Paul, 50-50 trade. Here's your first 50-50. There's your best entry. And then it starts to break up, and you're trying to take a momentum style trade. And I love that you get paid, and you're just not willing to lose. You're like, man, it's not perfect. Let me get in, let me get out, right? And then divergence prints and you're out. This is freaking amazing, Paul. You have momentum. It has the potential to break. You trade from the area, and this is the key to your success on this one, Paul. You take what is a momentum style trade that Nexgen teaches. And then, Paul, a mid-band when the large triggers are a full bar away is a termination condition. And when the termination condition reverses the market, that's a strong bottom. Pretty cool, right? The first trade was the best trade. And then you're taking a momentum style entry. And what you're doing is you're betting that with this momentum and these triggers up, this area holds and breaks. So you get in right at the area. Perfect entry, Paul. And you're capable of making $200 and getting out break even before things go south. That's phenomenal. To make $200 on a trade that failed. So, guys, these are the victories that you have to celebrate. Most people say, damn it, it didn't go. You should be saying, holy shnikes. Almost went there. Holy shnikes. On this failed trade, I still got paid because I'm a chart reader. Because I have it in me to recognize conditions changing, to know that it's not a home run trade, to get paid and get out. And I absolutely love it. All right, Chef, let's see what we got. I'm going to make this a little bigger because Chef's thoughts and Mark's eyes don't align. All right. So up top, you had a 50-50 trade. If you had looked back some, you would have realized that this was not a good bottom, that it could have given me the information you needed to stay out of this trade. So, Chef, what you're saying, and guys, I'm going to go through all of this before I read your thoughts. This was the potential to break an area. Absolutely it was. It had momentum. The small triggers went through. And Chef said, well, it wasn't coming from a termination that reversed the market. And what Chef's referencing is the KISS plan. And on these 50-50 trades, coming from a strong top or bottom, increases the likelihood of success on a 50-50, guys. It optimizes your chances of success. Chef didn't have it. And you'll notice on Chef's failed 50-50, he also had divergence. Chef broke 2 of the 4 rules for the 50-50 and lost. And then Chef, the cool thing is that you recognized it. You made a mistake, right? And that's okay. It happens. I don't even see where you got stopped out. Oh my gosh, you got stopped out all the way down here. Why did you hold so long? Those are 2. Where's your exit from the long? Because I see the close. There's your close from the long right there. And then you take the trend trade short. So you're telling me that you went long all the way up here, beautiful entry, and you let it run all the way down here before you finally said, you know what, this one may not be working. That seems excessive to me. I feel like you could have been out for a few ticks and been okay with it. That's huge, brother. That's hope. That's smoking the hopium. Or that's explosive diarrhea in there somewhere and you had to get up from the computer. But we're better than that. You're better than that. Your precision is there, brother. There's no reason to hope. We don't have to hope. We're good at this. All right, and then he gets odds favorable. Thought he had a clear path, but he didn't. But so, Chef, one of the cool things is when it's not a good bottom and the 50-50 right by the midband fails, it's likely to continue down. So you took a shot on the fib and you probably had a clear path or almost a clear path. That's a fib update. It just happened. You take a perfect entry, awesome stop placement, and you're able to get it all back. Momentum, guys, for the win. Absolutely beautiful. An overall successful trade, I agree 100%. So, guys, you want to get to where you want to be? Do this. Chef's thoughts. First, make sure that the charts are completely set up before trading. Today could have gone a lot worse. Second, the wide gap in the triggers gave me too much confidence in the trade that you overlooked the big red fib that could have potentially stopped your trade. Moving forward, focus on the rules better. Chef, I think you got caught up. You didn't have any stops in place? Okay. I would put that on the chart. Today's lesson helped. Get set up. There's nothing worse than waking up thinking you see a trade and getting into it, and then as it goes against you, go, oh man, I totally got into that trade before I actually did my research. I've done that, Chef, 1,000 times. This is a beautiful recovery, and that fib update, it just showed up. So you were probably so focused on this trade, you would not have seen this on the large chart, Chef. You wouldn't have seen this fib in the moment. It showed up on your small chart. You get a kitchen pass on this one. So momentum, it's going down, perfect entry, beautiful trade. Nicely done, man. I love that you put your thoughts on there. Preparation, right? Woo. All right. My darn small eyes. Entry was a bit late. Once it broke the fib, you took the trade with one contract. You kept a close eye on the fib. Kept a close eye on your trouble spots. Did you? Because you let it retrace. 2 points. And then when it breaks, you get back in. And then you get out at the trouble spot. I love it. And then you let it break and get back in. And then you get out and done for the day. Chef, you're a rock star. You take the first trade. Could have been out at the fib. Gave a little bit back. Stayed out of the shenanigans. This is what I love. Stay out of the shenanigans. Let it break. Re-enter. Get out before more shenanigans. Let it break. Re-enter. Get paid. Guys, can I say something amazing? And Chef, can I just give you a gold star? You knew about every one of these key areas, right? You knew about every fib on that chart. You knew where it was. You let it break, traded from the fib to the fib, stayed out, traded from the fib to the fib, from the fib to the profits. Guys, this is one of the most valuable, just heads up way of thinking that you could ever do it. Chef, you said let it break and then I'll get paid. And then you said let them fight. Who gives a shit? And then I'll get paid. Let it break and then I'll get paid. Guys, if you don't take anything out of today's class, if today's class is a 100% bust for you, steal Chef's charts. And notice how much he respects these lines. And Chef, it's always easier to trade from an area than it is into an area. And you just exemplified. So of course it's not a Chef pick unless you add the mental thoughts as you went through the process. After a year, has it been a year already? What today has proven to you is that you're still getting better, but I still have work to do. You started your trading just after 2 p.m. It was done by 2:15. Not bad for a day's work. Mentally, you know what to do and how to follow the rules. At times, you lose focus of where your termination conditions are, but you pick up on your mistakes pretty quick and manage your trade accordingly. Legend has it that if you just follow the rules, you'll win at least 70% of the time. You're currently averaging that even after altering your trade plan a smidge. Your key takeaway, focus, focus, focus. Remember that it's okay to alter your trading plan and tailor it to you. Oh my gosh. Give it a week or two on a sim account, then go live with it. If it doesn't work, go back to the tried and true method. Nexgen does as advertised. God bless you, Chef. I promise, guys, I did not ask him to write that. I did not tell Chef to write that out. You always trade with Mark's math in mind. You don't have to get rich off one trade. $200 a trade, right? Roughly 200. I love this. And Chef, what you did is you realize that it's not a race, right? You've got to learn it. You've got to practice it. You've got to fail a little bit so you know what it looks like when you fail. But it can be done. It can be done. Beautiful trading, Chef. And thank you for being as thorough as you are. And I'm going to save that picture forever. And when you buy the island and invite me out, I'm going to remind you of how you got there. All right, Paul. You know that I will. Just go steal it, Trading Book. You can go steal it. I love that. We will be welcome on the island. You know I appreciate it. We'll do tattoos and cook and have pina coladas. It'll be fun. Paul, are you asking about this one right here? I think I actually covered it. When we looked at your trade. But guys, the rules for a termination condition, so I'm going to do this for everybody. The rules for a strong top or bottom never change, right? So Paul, I think that's awesome that you're asking this question. Termination that reverses the market, and that's exactly what it is. So great job. Great job. You recognized it, and it's kind of fun when you can start to answer your own question, right? It's fun when you can start to answer your own questions where you're like, I'm going to ask Mark about this. And then you reflect for your second. You're like, oh my gosh, I know that. I know that. I've seen that. I know this answer. And look what happened. Weak top, straight back to the mid-band, finish the move to the fibs. Ladies and gentlemen, the people that control the market know where these key areas are. When John Novak was developing the software, he had a buddy. I love telling this story. He had a buddy that was in the pits in Chicago, and his buddy's job was to know where the institutions were buying and selling. That's it. That was his whole job. And of course, he can't tell John, here's their numbers, right? Because that's not legal. But John would send him his fibs as he was creating these algorithms, as he was in the infancy stage of Nexgen. And he goes, here's my key numbers. And when the guy in the pit said, man, you're within 50 cents. You're within 50 cents. John knew that he had something. John knew that he was going to revolutionize people's ability to recognize highs and lows. And guys, this is it. The buyers were pushing. And the sellers fought like they do. But the buyers knew exactly where they wanted to get to. And when they got there, they pushed a little bit past. But look how the sellers took over. Didn't make it, bounce, make it. The buyers just don't care anymore. And this is what you get out of Nexgen, guys. Knowing exactly, holy shnikes, there it is again. Knowing exactly where the market has the potential to stop. And then they push all the way down and a 50-50 fails. And I wonder if there was a divergence on the 50-50. And the market continues up. Pretty outstanding. Pretty outstanding. It's funny because my brother and I talk every morning, and when that sort of thing happens and we look at it, we're still amazed years later how powerful the fibs are. Trading book and pencil. Odds favorable momentum. No area to target. We'll call that a clear path, right? Almost. It's a 50-50 on a divergence high. Do you see that? Smalls have smashed through. Large haven't quite made it. Odds favorable momentum. This pink line represents a point that may stop the market, just like it did there. Does that make sense, trading book? I don't know what that means. You have odds favorable. It has the potential to break. Did you recognize that you were 50-50 on a divergence high? That's all I need to know. It's not a high probability trade. It's a medium probability trade. Let me show you why I say that. Don't show me your butt. Yeah, but that's how people lose. It's not a clear path, but it's not odds favorable, but it's not an area inside of favorable large triggers, but guys, every time you show your butt, things are more likely to go wrong. So check this out. I'm going to show you exactly why it's so important that you speak to yourself in terms of advantages. You didn't have a clear path, my friend. You only had the potential to break. Does that make sense? On a 50-50 look. Does it make sense? Is everybody with me so far? It's only the potential to break. So I have to change my thinking. I have to say to myself, without that clear path, doesn't it make sense to rely on momentum? Doesn't it make sense to make sure that I have a clearly defined entry area? Because if I give up either of those, if I give up my momentum, I'm working on 33%. If I give up my entry area, I'm working on 33%. So trading book, I'm not knocking your trade at all, but what I'm saying is I want to make sure you understand that that was not a clear path. Because it's going to change your thinking as you grow with the software. You had odds favorable momentum. You had odds favorable momentum. So you did not sacrifice momentum on this trade. You had area inside of favorable large triggers. And it overran a little bit because there's a fight at the potential to break. You capitalized on the advantages. You recognized the disadvantages. And you got paid all the way up to treble. It's beautiful. What a great trade. But one of the things that I'm going to do, and you're going to find that it's annoying, most people do, is that if you misannotate your charts, I'm going to point it out and I'm going to give you that clarity, because I think that when you speak about advantages, when you really talk to yourself in terms of advantages, and guys, I think you should build one of these. I really do. You should print this out and put it on your desktop, because if you had this on your desktop and you said to yourself, do I have momentum? And if the answer was ever no, then you know what you're insisting on before you ever think about looking for a trade. And you're literally probably going to say to yourself, well, shoot, I don't have momentum or a clear path. And this final one says, why the hell am I risking money? Right? Because you're talking about what's going for you and what's not going for you. And guys, print one of these out. Build one of these. Maybe I'll put that on the high probability trend trade checklist sheet, where you could print this out and do it. Because what it does is it just sets your brain right. Am I looking for a high probability? Is this only a medium probability? Do I need to manage more aggressively? So I'm not at all, trading book, knocking the fact that you called it a high probability. I'm just saying, if divergences started printing somewhere around here, you'd say, oh crap, I got to get out. I have to manage more aggressively. Does that make sense? The same way. The exact same way that you would have had to do it right here, because this one failed, didn't it? But that one worked. No divergence, strength, entry area had a lot to do with that. Good stuff, man. Really solid. You are coming along nicely, my friend. All right, Gary, let's see what you did. Gary's a little more advanced. Your NT8 is untradeable. F5, Gary. I don't know if you're still in here. It wasn't a high probability trend trade, trading book. I'm going to get you on language. It was a medium probability trend trade. Gary, F5, anytime my triggers look like this, F5 will reload the Ninja script. If it's every 5 minutes, I'm not sure. I would start fresh. I would delete everything and start fresh if it was every 5 minutes. That would be my course of action. I would just get rid of it and start brand new. I would rerun indicators from the resource page. I would do all new workspaces. I wouldn't even mess with this with potential corruption. I would beeline for the resource page and I would delete everything. And I would run that and I would repair Ninja and I would reload all my indicators. And if you need help, whoop, that was reviews. Sorry. If you haven't left a review yet, guys, go say something nice. John's on the brink of firing me. I'm sure of it. Might save my job. Not really. I think I'm pretty good. Gary, this is what I would do from a tech standpoint. Right there. I would delete old charts, templates, workspaces, and I would start over brand new. Guys, I'm not a very techie guy, but I've broken enough stuff that I've got a pretty good idea how to fix a lot of things. All right, high probability NASDAQ. All right, are you... Thanks, Steve. Shrinks don't work on us. All right, are you with me, Trading Book? All right. You see that fib right there? Gosh, Steve, I don't have that memorized. I know that I think pretty much everybody's upgraded the newest one. You can run the installers from the resource page and it'll reinstall. It'll repair anything and upgrade and update to whatever John's got going on there. Or you can just straight from your control panel, if you go to help. Let me see if I can find mine real quick. Hold on one second. I believe from the help right here. Resources, video guide, emails, report. I think download. It'll get you to the most current, I believe. That might just be download Ninja. Help, and then it tells you which one that you're on. Okay. About, the about button. There we go. Tells you where you're at. It doesn't tell you if it's the most current though. If you go to NinjaTrader's website, it'll tell you the most current. Or Steve B, I know that you have access to Traders Chat. If you ask the same question in there, there's going to be 1 million people that have already asked it that'll know the answer. I hate that I'm not that great at tech, guys. Because it really does. I wish I could have every answer for you guys, and I don't always. And it bugs me. I know you guys are cool with it, but it bugs me. All right, so Trading Book, with that fib right there, is it a clear path? I'm just going to get you thinking in these terms all the time. With that smalls through large knot, we're going to call it that 50-50 look again. Once again, the momentum is amazing. It's not a clear path. Not a clear path. Smalls are through. Large are not. It only has the potential to break. Can never, ever, ever be a high probability trend trade. Can never, ever, ever be a high probability trend trade. What does that mean? It means that now you have the opportunity to put your management hat on, right? And I'm going to show you this one more time. No divergent strong triggers. That is absolutely awesome. Great entry. Absolutely awesome. And did you notice, Trading Book, that this divergence jacked up your good time? So if you thought this was a high probability trend trade, this divergence doesn't even hit your radar. However, if you're in a 50-50 trade and you know it, you know that divergence, without question, can ruin your good time. What a great example, because we get to see it in both. But if you believe this is a clear path, that divergence never hits your radar. It doesn't even faze you. But once you accept that it's not a clear path, once you can read in the moment that it's not a high probability, when this divergence prints, your exit is somewhere around right here, which means that you never lose money, that you make money on all your contracts. And as the market rockets past everything that you thought was going to hold it, you knew about it and you had a trading plan and very specific rules that allowed you to manage out and take profits. Does that make sense? And this is why I go broken record. If you don't know the difference between a termination, a 50-50, and a clear path, then you might not manage your trades correctly. So let me open up this one. I love it. What a great lesson. You have to know these two things: why you're going to enter and why you're going to exit. And your exit conditions, ladies and gentlemen, will be different for every type of trade you take. Every type of trade is going to have a different exit condition. So the more trades that you try to take, the more exit conditions you're going to have to memorize. And if you don't know the difference, and I'm not saying that you don't, Trading Book, but if you can't tell the difference between a high probability trend trade and a 50-50 trade, then you may manage it the wrong way. Does that make sense? And guys, this all goes back to the whole idea why I think it's so important that you focus on these first two things. Once you have momentum and a clear path, once you can discern those in a moment's notice, everything else starts to fall into place. Everything else starts to fall into place. I promise you. Great stuff. Have I mentioned how much I love teaching this class? An absolute blast. This is such a good time for me. Andrew Z. All right. Good top? Absolutely. Strong triggers? Hell yeah. No divergence? I'd agree. Is this divergence low still considered? Absolutely not, Andrew. Great question. This divergence low is no longer considered because the small and the large got through it. Great observation there. So let's do this real quick. It's a 50-50 trade. It's from a strong top and there's no divergence, right? This is setting up to be absolutely beautiful, Andrew. Everything about it just makes me, I'm like, wow, this is awesome. And then I notice that my large triggers are all the way down here and my synthetic triggers are all the way up here. And Andrew, are you comfortable? And everybody in the room, are you comfortable with the idea that price returns to large triggers? That's the correction point. That's where I expect price to come back to. And what this giant gap between the two triggers means to me is that price may go from here and it may go from here. And I've really widened my window of opportunity. I've just made a huge amount of risk. And there's too much potential for things to go all over the place. So from 0350 up to the top of those triggers, 09 is 6.5. Is 6.5 points. How much is a point on the S&P? $100? So to have a stop that makes sense, you're risking $650 on the potential to break not one but two areas. Does that make sense, everybody? Can you hear me? Is everybody just like, dude, Mark, I don't get it. So Andrew, one of the things that you can do when these correction points are so far apart from one another, one of the things that typically helps, because your setup is great. It really is. It's a great looking setup on the large chart, is when my correction points are so far apart, I'll insist that the market give me a reversal bar to confirm the direction of my trade. And it doesn't guarantee a winner. Guys, it does not guarantee a winner. Not at all. But what it does is if you insist on a reversal bar, well then your risk is already established. And you still would have lost this trade based on that. And then when this divergence prints right here on the 50-50, the same way as we had with trading books, is the small chart told you this area wasn't going to break. That divergence told you, that's it, game over, let's get out, right? And you probably would have been stopped out up here. But guys, remember, this is medium probability. This isn't high probability. This is, I'm hoping that it breaks. And I'm not just hoping that one breaks now. Now I'm hoping for two to break. Does that make sense, Andrew? Your large chart look was absolutely phenomenal. What a great look. Your small chart just started giving you a little indecision. And guys, when I have a little bit of indecision, I force confirmation. I'm willing to pay the price for confirmation. Because if you never get the reversal bar, you never take the trade, right? If you never get that confirmation, then you never jump in on the sketch. So great stuff, Andrew. Awesome large chart read. Awesome large chart read. This is everything that I look for in a 50-50. And man, I'll tell you, I would have been in on the reversal bar, and those jerks would have got me. They would have stopped me out the same way they stopped you out. I think you did this about as well as you could have. I just think that you could refine that entry a little bit, maybe. Or even, I don't know, let it give you the reversal bar and maybe mid-bar put a limit order and say, well, if they fluctuate, get me. It's a great look. I can't find anything wrong with your large chart, not even a little bit. All right, Joel. Would you be trading into a term? What are your rules for termination, Joel? If price reaches an area and the triggers remain below, is it a termination? Of course it is. It always is. You're 2 ticks below. So Joel, you get out of this on a technicality. It didn't reach the area. So it's not a termination. Does that make sense? It's 2 ticks below. And Joel, this is where you make decisions, right? This is where you start weighing out advantages. This is where your chart read pays dividends. You're coming from a strong bottom. Look how support stopped that market cold. You've got great momentum. You've got every indicator on every chart that points up, and you've got one line with minimal risk where you can take this trade to see if they get back up to that line. Joel, how do you feel about it? I feel like you have enough advantages to justify the entry. I feel like you have enough advantages and such minimal risk. Why not, right? Strong bottom, strong triggers, one line. I mean, my gosh, that's beautiful. I'd take that trade. Wouldn't hesitate. What if the areas offered a lot of risk, right? What if we were coming from the middle of nowhere? You may have a different choice. So in the beginning, let it be really black and white, guys. It didn't reach the area. Let it be really black and white. And eventually, you may change your approach. But in the beginning, just let it be easy. Nice job, Joel. I like it. And great question. Technically, no, you are not trading into a termination condition. You're trading to a termination condition. Love it. Good stuff. Man, we got through pictures quick today. Guys, there's rule number 2, keeping you from wasting all your money once again. Did anyone take a trade in here that's willing to admit it? Maybe we can analyze it. You took one, Cheetah? Man, Gary, I don't have any idea. It's just asking about rollovers. That's it. I don't know what this has to do with the restart. This is just database rollover. I would go to Jason. I'm going to run out of smarts real quick. I would go to Jason. He's just going to get you quicker. Cheetah, you got in at 53.15. Long or short? Right here? Into the termination? I'm trying to see a 15 entry, 53.15 entry. This one? You got long at 53.15. Down here? I don't know. You could show me a picture. You don't have to. That would be so much easier than me guessing, I think. But I asked that, guys, because there's money to be made in ranges when you start getting in sync with the market. There really is. There's the potential for money. And I was just wondering if anybody did it, if anyone pulled it off. If we could take somebody's chart and look at it and talk about advantages and talk about disadvantages and see what was going on. Erla, your charts just make me happy. I'm not going to lie. Guys, the market stops at key Fibonacci areas. It reverses the market and it gives the absolute best momentum ever. Erla knows, because Erla studies, that this is about the best case scenario for a market to continue up. This is about the best case scenario. And with all of that momentum, even though it's not a clear path, Erla says, you know what? I'm going to get in. And Erla, my only thing is you don't have momentum here. And it pushes a little lower right to where you knew it could. So your stop keeps you safe. And you get paid on the way up. And then you said to yourself, well, I'll get out with divergence. It didn't make my entry area. I'll get paid. I'll wait for the next one. Great job. It's not a high probability trend trade, guys. But it sure does rely on some good stuff. How do you set the buy price for the crossover with the midband? So I'm assuming you're asking about a limit order. So I'm going to squeeze this. So Belt, if I want to, well, the key is to slow down, not you, but the more you study it, Belt, the slower it seems. One of the things that people, and it's always funny when they come back later. Whoops. Between this reversal bar and this reversal bar was about 1 minute and 45 seconds to make a decision. And obviously, hopefully nobody's going long into termination condition. But that pullback was 1 minute and 45 seconds, Belt. And if you're brand new, it feels like 4.5 seconds, doesn't it? It feels like that is the quickest movement you've ever seen in your life. And I'm going to tell you, the more times you see exactly what it is you're looking for. The more times you see this pattern without the fear of entry, without having to process it, you know exactly what it looks like. You know exactly what it looks like, Belt. And what happens is it's almost like the market slows down. And I tell a lot of stories, and I love this. This is one of my favorite stories. Is so they did an interview with NFL quarterbacks, the rookie quarterbacks. And one of the things that the rookie quarterback said, and Belt, you're a rookie quarterback right now, is that the NFL is blazingly fast compared to what they're used to. It feels like everything is fast forward. And then they pan over to Tom Brady, who's got 20 years in the league. And Tom Brady is like, you know what? It might as well be in slow motion at this point. He goes, I can look out onto the field and know pretty much exactly what's going to happen. And day trading is very similar, Belt. The more reps you have, the more times you see a pattern, the more time you spend in the market, the more feedback you get, the more annotations you create, the slower the market seems to move. And then once it slows down a little bit, and it will, if I right click above the current price, sell limit 2. And this is how you're going to catch your trend trade short. You're going to activate a sell limit order, and the rules aren't met, but if price comes up and hits this order, right, on that retracement, then I'm going to go down. And if I right click below, I can put a buy limit. And if price comes down to this buy limit, retraces back to this buy limit, I'm in a long position. So I can anticipate, I can lead the runner and just wait for it to come, right? And if it comes down and hits me, then I'll be long. On Vanguard, you can put an order to buy at a certain price, and that's exactly what we just did. That was the limit order that I just did. Yep. Did you catch it, or were you typing? Because I've done that to people before, where you're looking at your fingers and I'm giving a lesson. Yeah, so that's the easiest way, is limit orders, and we wait for the market to come to us with limit orders. You can always hit buy now or sell, buy or sell market. But I really think that the easiest way to do it, because we're that good, is just wait for it to come to you. And you'll have a lot more reaction time than you feel like you have right now. And then sometimes you need a reversal bar. I talk about that confirmation a lot. You know, it's not perfect, get a reversal bar. And in that case, you can right click and you could use like a sell stop, which means that if this becomes a reversal bar, and I put it right on that gold bar, if this becomes a reversal bar, obviously it's not, it'll put me in a short position. It'll confirm that the market's going in the direction that I want it to go. And I don't know if I have a limit order one. Maybe I should build one. But I do have one for using buy and sell stop orders. And I'll drop that in the room right now. For when you're waiting for that confirmation, that's the most effective way to do it, so you don't have to guess. And then Cheetah, let's do the chart read. Look at this. Bad top, support holds. Bad top, support holds, right? And Cheetah's like, man, this mofo sure is likely to stop the market with this look. Does everybody see that? It's a second hit. It's already held. The triggers are all above. It's a pivot stop out. It's a blue fib. It's a green midband. Does everyone see how Cheetah says, you know what? I'm feeling like this one has a better chance of holding than breaking. It's not a high probability trend trade. And then Cheetah says, check it out. The small crowd right at this area that I anticipate to hold is stealing divergence, right? And my small triggers are rolling up, and I'm getting to the other side of the large triggers. I'm going to take a shot. I'm going to take a shot at this area holding. And Cheetah, this is beautiful. And your patience is amazing. Instead of jumping in right at the blue fib, you let the small triggers, that fastest momentum indicator, slow down a little bit. Belt, did that answer your questions? Did that give you what you needed there? And Cheetah, nice job. And guys, this is what I'm saying. When you start really figuring out your software and learning how to read it, you're going to see more opportunities. But if you're brand new and you try to do what Cheetah does, you're going to get slaughtered. You're going to get run over. Cheetah's been doing it a little longer than you. And man, PFI, you put a picture in and I just realized that I didn't click on it. I just had that epiphany where I'm like, did you pull it out? Did you delete it? I don't remember clicking on your picture, PFI. But I remember you putting one. You did delete it? Okay. Everything's important. If it's important to you, it's important to me. That happens sometimes. It can definitely happen. Time frame, days back, adjusting things. Guys, rule number 2, look at that fight. From fib to support to divergence high to support to fib. Oh my gosh, it would be so easy to lose a lot of money in here, but it would also be so easy to just be patient, to just say, hey, you know what? It's not the best of the best yet, and my money's worth the best of the best. And sometimes your advantages come from your ability to do nothing when there's nothing to do. Is the market going to go up or down from here, guys? Who knows? Is that market going to continue up, or are they going to sell it off? Anybody? Is anybody certain? Should we go to the Oracle? Will the market go down? Very doubtful. Hold on. Will the market go up? Without a doubt. Well, there we go. Just kidding, guys. This is about as accurate as your opinion is. Magic 8 Ball. And if it goes up, that's going to be outstanding. Hey, Z-Robot. Man, I was wondering when you were going to type in my room. Good test. Good test. Guys, I'm going to take 5 minutes. What's crude oil doing? Running all the way up. Did anybody... I think that was Joel's long, wasn't it? Pretty cool, right? And then there was Ron's long. Maybe Zorro's long. Maybe Pete's long, right? And then, man, Pete is like, watch me, guys. Hold my beer. Is there a shortcut? Shorter than just clicking on the chart? I don't know how I would decrease that. How are you doing it? I just right click and click buy limit. That's it. I don't know how you could make that any faster. Does that not feel fast enough for you? You almost always... Does it run without you, Adriana, because you don't have time to activate it? Or does it run without you because you haven't made a decision to take it until price already gets there? Does that make sense? Because when I'm a little confused and I'm working through things, ideally, right, let me take this picture and you'll see it. Ideally, right here, I make the decision that it's time to put the limit order in, right? And what happens is even more so is you'll do it before you ever get the reversal bar because you know your rules so well that you begin to anticipate it. Does that make sense, everybody? You'll literally be able to just, when the market was right here, I promise you, you'll start saying, come on, give me a pullback, give me a pullback. I see my area, just give me a pullback. And it'll go all the way up and you'll wait for the reversal bar and then you're like, I knew exactly where it was going to be. That's where you'll get, guys. When you know your rules, that's where you get. And then Adriana, if it's moving so fast that you can't process that, that's tough. No, it's okay. I'm just turning it into a lesson. I'm not coming after you, I promise. But what'll happen is you guys will start to anticipate. It's almost like leading the runner, like playing duck hunt. Um, yeah, and just simulate. Practice it a lot. But if it's, and Adriana, what I'm focused on is you say that it runs without you. If you want help with that, let me know. We'll talk about it. I won't force you to talk about it. Guys, I'm going to go take 5 minutes. Go stretch your legs. And when I come back, guys, last hour's yours. Tell me what we're going to talk about. PFI, it's great to see you in here. I can only assume you may have something on your brain since I haven't seen you in a while. Feel free to drop it in the room, guys. I love talking about anything and everything. Howdy. I'll be back in 5 minutes, guys. Go stretch your legs. Last hour. Here we go. Terminations for the win. So this looks like a good way to talk about the gap theory. And I want you guys to see this. The gap theory, ladies and gentlemen. When is my large chart mid-band a termination condition? Rob. When is my large chart mid-band behaving as a termination condition? Guys, your mid-band is a termination condition. 100%, without question. Rule number 2, not met when the large triggers are a full bar away. Right from the user guide. Large chart mid-band if the large triggers are a full bar away. What does that mean? That means that there was room for an entire bar to print before they hit the large triggers. You know that that's true because this little gold bar showed you exactly where this bar was going to be a bar. That's your reversal bar marker. Large triggers are above it. They're more than a full bar away. What that means is absolutely no short trades. That's it. That's all it means. It means the mid-band's a termination. And some of you are going, but it didn't reach a fib, Mark. I needed this short trade. Well, the mid-band was hit and the triggers were a full bar away. So, Rob, I told you that you're going to get a grasp on this by losing a couple trades. And that's the easiest way to understand the gap theory, guys. And I'm sorry that that's the case. Some of you said, all that momentum, everything down, it didn't hit a fib. Let me take this short from the mid-band. Did anybody do that? Or to at least think about it and say, man, this looks like a good one. I would have, as a brand new user, in a heartbeat. This look tells me that price is more likely to do that, which keeps me from taking this short. It keeps me from getting in at that mid-band. It keeps me from getting stopped out. It keeps me from losing that money. And Rob, you're going to have a moment where this happens to you and you get run over and you're going to be like, dude, what the hell? And you're going to go, aha. It's sucked back to those large triggers. And guys, that's how you learn to use the gap theory. It's there. There's 100 pictures. Well, not 100. There's probably 25 pictures of it in the spreadsheet that I give you guys. It's something that you can study, but it's one of those things where you really kind of have to live it a couple times. It's hard to recognize in the moment. And it's even harder to accept the fact that all it says is don't take that short trade initially. And then you may find opportunities to capitalize on that gap theory. You may say to yourself, this is a bad top. This is a mid-band that's a termination. It's likely to suck back to those large triggers. Maybe I'll take a long trade to close that gap. And you'll start incorporating different lessons. So, all right, guys, we have 45 minutes. What do you want to talk about? I'm going to go awkward silence. I'm going to force you guys to tell me what we're talking about. And anyone that's been in my class is like, he can't shut up for more than a minute. Magic 8 Ball said we were going up. Stupid Magic 8 Ball. So what do we see? Do I have odds favorable momentum? My small triggers are working inside of my large triggers. Is that strong triggers or is that weakening triggers? What do you guys think? I feel like it's weakening. I do have a clear path, but guys, I don't have any lines inside of triggers. Which line's going to stop this market, if any of them do? Hell, I don't know. 2 out of 3. Cannon, have a good one, man. What market? Show me a picture, Belt. I don't have a gold chart. Will you show me a picture of it? Let's go through and talk about it. Now, Rob, I can adjust the size of the bars like that. Oh, you did post it? Okay. I got you. Your bars, and then I'll come back to you, Belt. Your bars are based on ticks. They're based on price. Let me see if it's in the glossary of common terms. It may not be. I'm sorry if that gives anybody... All right. No, it's not comparatively. Not at all. So what it is, Rob, is this is a 13-2 bar, which means either 13 ticks up or 13 ticks down. So every bar has the potential to be 26 ticks. That's all it is, 13-2. 13 is a Fibonacci number. 2 is what it takes to create the bar. That's all. All right, Belt, let's see. Price reached the mid-band. Large triggers were down here. And you said at 912. So right there, you were about to go long at the mid-band and you remember the lesson, wait a minute. It can correct down to the synthetics. And then when it did, it never gave the reversal bar, did it? And Belt, welcome to Nexgen. This is what we do every day, is we talk about patterns. And I've seen them all, I feel like. I still learn every day. But remember earlier today, guys, this is pretty cool because it goes back. I think it's cool because it makes me feel smart, and I don't always feel smart. It goes back to exactly what we said. Correction point 1, correction point 2, right? Correction point 1, correction point 2. When my correction points are so far apart, I'll insist on the market giving a reversal bar to confirm the direction of my trade. Guys, we typed this out earlier at like 9:30 in the morning, 10:30. This was like 45 minutes ago. And Belt says, hey, check it out. There's that exact same lesson, Mark. I'm so glad that I heard it. It kept me out of a loser. And I'm telling you, there are a million lessons to learn, guys. But if you keep them pretty basic in the beginning, yeah, you're learning. You can be taught. We can all be taught, guys. The biggest challenge that any new user faces with me, Belt, I'm going to give it to you right now. Did anyone ever play Where's Waldo when they were kids? And when you're looking at everything, it's freaking impossible, right? It's so hard to find Waldo. But when Waldo's just right there, you're like, yeah, that's Waldo, and you can describe him to the letter, guys. If you're looking for all the money, this is what it looks like. If you're looking for a couple advantages, it can be this easy. So it's up to you. He's there. That's the path. And when there's no areas inside, ladies and gentlemen, look at that. 1, 2, 3, 4 weak triggers. Even though the large chart technically still has a clear path. Jerry, I'm going to assume that he will. I can't speak for him. But there's a lot of folks that use Ninja. And there's a lot of clients with Nexgen that use Ninja. So, yeah, and I think we still have some clients that use TradeStation, to be honest with you. And they reach out to John every now and then for software. But once that platform, once the browser version is up and running, I don't know that anyone's going to want to stay on Ninja. I love Ninja. I don't have any problems with it. Belt, you're asking me things I don't know. I know that he's spent the better part of the last year and $1 million with programmers all over the world working together to make it happen. And they're still doing it. Just even getting the fibs to print was huge. Some things are easier than others, but the goal is to make it 100% identical, Jerry. 100% identical, but you'll be able to do this. So guys, this is my trading view. If I click on my little TV link down here, this is trading. This is trading view, right? And this doesn't have Nexgen indicators on it because we can't recreate the fibs. But John Novak recreated the one-to-ones, and we got some trigger lines, and it's a different style bar. And we've been working on creating rules for this, but this will be similar to what the browser's like, where you can just open it up, right? And you can spread it out over. You can do it on your iPad. You can do it at the beach. You can do it anywhere you want. Go on the golf course. Go hit a birdie and then rock it out. And our software will not be on TradingView. The T3 software will not be on TradingView, but you would have to pick a broker. AMP Futures. AMP Futures is who John's had a relationship with for 20 plus years, and I believe that they're going to be an integral part of what we do. If I'm not mistaken. Guys, when you start asking me questions about all this stuff, I don't know. I couldn't tell you. I'm an idiot, guys. I know my scope is so narrow compared to so many of you guys in this room. I don't have the experience outside of Nexgen. And that's what I've heard, Paul. I know that John's had a relationship with them forever. John's known the AMP guys forever. And one of the things that we're doing is when the Nexgen funding company is 100%, guys, is there's 50 million TradingView users. So we're doing our best to make sure that we have an indicator package available to those users that don't want the NinjaTrader software or the T3 software yet. And we're just trying to make something accessible. We want to be there for everybody. So we're creating trading plans, even for TradingView. But ideally, you're on TradingView now. I love TradingView. I have a blast with it. I play with it every day. I'm learning it. I am learning TradingView because I'm probably going to have to teach it at some point. So I'm trying to learn as much as I can. 3 years with them. And that's the consensus trading book. That's what I've heard. I've never heard anything bad about it. I heard people love it. So what we're going to do, because people love us, because we're lovable, just ask me. So we're going to try and make it to where you guys can do the exact same thing, or at least similar. And my hope would be that if you get our basics, simple whatever on TradingView, that's your introduction, right? That gives you the opportunity to be introduced to just how powerful Fibonacci is. And hopefully they come over and they meet us. And they say, wow, that's pretty crazy that you guys have these lines and you teach people how to use them. And you've been doing it for almost 30 years. That's pretty awesome. It's fun because, guys, I firmly believe this is the best software out there. And I say that probably because I'm biased. But I know that my brother's been telling people for 20 years that if you can find something better, send him the link, he'll buy it. I don't have a gold chart. Oh, see, now you're going to ask me to read. That doesn't, yay. But what does that mean? I don't have a gold chart. Someone show me what gold is doing right now. Who has a gold chart? Belt, do you have one? Can you show me gold right now in the moment? Let's compare. Let's see what Nexgen says about the long. You can't show me your strategy. All right, well then I'm going to boot you from the room. I can't show you mine. All right. Large triggers are up, but the smalls are below. You can rent it to me. I love it. And you're looking for the long. Okay. So I'm going to talk advantages. A second higher divergence is kind of cool. I do like seeing that. But I'm also seeing a mid band from a bad bottom. I'm seeing small triggers below a lot of areas, and maybe there's some room for fluctuations in there. I love it that your target hit. We'll see what happens with it. I don't have rules, Matt. Gold on higher time frames easier than tick. I could see that. Gold's a little erratic. Gold's a little bit. I think that if you're not looking for home runs, gold offers a lot. I think that there's a lot of overrun in gold. Good stuff, man. And guys, that kind of goes back to one of the things that I always say, Trading Book, and I believe this wholeheartedly, is that there's a lot of amazing traders out there. I mean, just unbelievable traders that don't even know that we exist. And a lot of times those traders show up here, and I'm not saying stop what you're doing. How can we help? How can these key areas help, right? How can little things here and there accentuate what you're doing? And I've had people come in with outstanding trading plans, and all they needed was the fibs, right? You bought Nexgen Personal with the tick charts. Love it. It's nice. And I'm telling you guys, I'm spoiled. This is all I ever know. You needed John's mind? Yeah. He's brilliant. He's brilliant. And what's fun is he's fun at a party. He's not your typical smart guy. He's a lot of fun at a party. Guys, what do you want to talk about? I still have time. Oh, I'm sorry. Will there be a different cost structure for current Ninja license owners? Jerry, I believe absolutely. He's going to take care of you guys. He's still going to try to recoup a lot of... No, I think you're hearing internet lies. Jerry, I think that there is a discount for you guys that already own the software. But he's got a lot of personal money invested in this one. And I think he definitely wants to recoup some of it. So it probably won't be free. Yeah, he's never been the CEO of a brokerage firm. I've known him my whole life. John Novak went from... So John Novak and I had a very similar path up until he broke off to create Nexgen. We were both service industry. It was one of the reasons why Nexgen is so service focused. One of the reasons why we're so intent on taking care of customers. I think that's just our upbringing. And then people in the restaurant industry, if they don't go into management like I did, they find themselves in sales more often than not. And John found himself in sales in Houston. And that's where he met the gentleman that traded Fibonacci. And that's where he got the idea for automation. And that's how Nexgen was born. He didn't wake up and decide to go to school one day because he wanted to be in the futures markets. He was introduced to it and just fell in love with it. And man, you want to talk about passion. It's pretty fun. It's fun watching him get excited about what he does because he still gets excited about what he does every day. I get texts from him at 2 in the morning. Like 2 in the morning, he sends me pictures. Dude, check out this pattern. I'm like, I'm asleep. I can't. Good. I'm glad that you feel supported in the room, guys. We really do love what we do here. And that's one of the things that I'm excited about is it's just everything is success driven. There's always something to learn from everybody's trades. The only challenge and the only thing that I want to see is, or that I want you guys to realize is that there's a million ways to use the software, and you're going to see a lot of people doing a lot of different things. But just remember that you don't always understand what's going on in their head when they do it. John will show you guys one chart. You don't see the other 3 charts that he's looking at. And you don't see the other things that are going in, and you don't know his trading plan. So he'll make it look super easy and effortless, and if you try to do what he does, it doesn't always work out. Man, how's that for a termination condition, guys? Are you watching this? 53, 26, 75. Pretty cool, right? They break all the time. Areas break all the time, guys. But what happens is you don't have to trade into them. And I think that's one of the biggest advantages. Someone asked me once, well, where do I get out? Wouldn't a line be a great place to get out? Like, wouldn't it be awesome to know that this red line could stop the market? And just, Chef did it earlier. Chef did it amazing earlier. Oh, have a good one. Have a good one. And Chef, you did exactly what I would hope everybody would do, right? You learn to respect the terminations. You learn to respect the power of Fibonacci. And instead of trading into Fibonacci, you trade to Fibonacci. You let it break, and then you get paid. And then you let it break, and you get paid. And guys, you know exactly where the people that control the market are likely to have a reaction. That's it. And I think that's the biggest thing is you know where these reactions may happen, and then we give you a couple little rules to follow to keep you from getting caught out. And then we all mess it up by overthinking it. And we start adding rules and we start adding conditions before we understand the basics. And keep it simple. Keep it focused. Have fun. It really is fun, I think. Belt, anything on your mind that I can help with? Especially you guys that are rolling through on demos right now. The chances of you being a professional day trader by the end of your demo is slim to none. You're flying to Seoul? Holy smokes. Be safe. Have fun. Take pictures. But I think that if you pay attention, if you pay attention during your demo, you're going to realize that this works because you watch people work it every day, right? And you don't have to make $1 million with it. You have to make a little bit. You have to get your share. And I love the demos, but there was a long time ago where I went in and I was working with John a little bit and trying to help in sales. And I'm not a salesman. I'm no good at it. And people used to say, well, that was a loser. Your stuff doesn't work. I'm like, well, that was one trade, right? Let's look at 10 of them with the exact same conditions. And that's kind of how it works. And well, show me an account. That used to be the big thing. Show me an account with all the wins in it. And I'm like, well, why don't you just scroll through and look at what everybody's doing? You know that it works. You just got to learn how to work it. That's the biggest thing. Is you just got to learn how to work it. And then belt, let's see what we have. All right, you got your entry. Support's holding. Momentum's increasing. And you're looking for a line to get out. We'll see what happens, man. I'm rooting for you. This would be one of those times. There's one line inside. Do you see it? And this is what gold does. You see that overrun on gold a lot. I see this a lot on gold. But that's pretty, man. And then 5. Yep, stop makes sense, right? Everything's starting to head up. I'm rooting for you. But right now, belt, everything says up. Every indicator on every chart says that you're likely to go up. And let's see. I'll be damned. You're going up. And you've got no risk on the trade. And it just keeps getting better as the trade progresses, doesn't it? Now your small triggers are up. Now your large triggers are up. Now your synthetics are up. Every trigger is above the area. Is there any reason to believe this market is just going to stop and drop? It could, right? Did it hit your target? I love it. It doesn't have to be difficult, does it, Belt? Doesn't have to be difficult. You were even going to give it a chance to run. I love that. Target filled. So here we go. We're going to change your language. You ready, Belt? Bingo. That's what everyone says. You hit your target, man, put bingo in the room. I love it. What's fun is when everybody in the room is in the exact same trade and you see like 10 bingos come in. Bingo, 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 bingo. And you're like, hell yeah. Gold has a little overrun. You adjusted for it. That's it, man. And if you waited for the confirmation bar, same thing, right? Because it's gold, because it wasn't odds favorable yet. You still got the trade. I love it. Great job, dude. And the fact that you're doing this in your first week, I think it says something. The fact that this can be done in the first week is pretty cool. I always tell people, imagine where you're going to be in 30 days. Imagine where you're going to be this time next year. It's going to be pretty cool, I think. We still have a little bit of time, y'all. So far, the termination's working. Don't really have a short trade. My large triggers are still way up there. I still have Fibonacci areas that all my triggers are above. So I can't really go long, but it's too soon for shorts. This one has the potential to break. And if you took the 50-50, it didn't work. Divergence pushes it lower, and now we're just in a holding pattern. We're just waiting for the market to give us something. And you say red triggers, so no long. Where do you see red triggers, Belt? Red line. I like it. I like that better. That's it. Just wait, right? Let's wait and see. You still have a little bit of room. You could make a decision where maybe the area inside of favorable large triggers would be super low risk. It'd be like a 4 or 5 tick risk trade at the most. You're on simulator. Practice, right? Because you are still 4 ticks away from that fib. 4 is a pretty good number. 1 or 2, I might get a little nervous. 4, I might have some fun, especially on simulator. Annotate my charts. Odds favorable momentum. I'm coming from support. I haven't reached resistance. And I've got one line inside of favorable large triggers where the market may continue. And I know that if I'm in at 58, my stop belongs at like 54. That's 40 bucks. That's about the least amount of risk you're ever going to get in a trade. Kind of cool. Have you guys seen this one? The experience curve? Everybody goes through this. Looks like fun. Oh my gosh, I'm going to have to study. I'm loving it. I think I've got it mastered on day 10. Let me go live. Oh, crap. Maybe it takes more than 10 days to make $1 million a year. And then you get on that path, guys, where you participate. Happens all the time. Pretty normal. I'm just looking to see what I have in here because you guys aren't asking questions. How about this one? I shared this one with someone yesterday. I think everybody in the room's been here though, guys. Build a foundation with the best of the best and then grow from it. Don't be the trade police. You can learn from other people, but don't be the trade police. Build the foundation. Get the reps in. That's a lot of risk. So this is where you ask yourself, how far past everything wonderful am I willing to let it get? Is $200 worth of risk? Does that make sense? I can't wait to see how this one ends up. I would say that's excessive, me personally. I like the entry though. You have odds favorable, everything says up. You got the perfect entry, like a rock star. I just don't know how much I would give it. It'll be fun to see what happens. You halved it. Let me know how it turns out. It's fun, right? But Belt, get in the habit. Start writing on your charts. Start talking about that momentum. Start talking about whether or not you have a clear path. And man, use that language, area inside of favorable large triggers. Start building a plan in your head. Start building something that lets you create repetition, that lets you do the same thing every time. And that's one of the things that you guys will notice when you spend any time in this room, is that the people that tend to be posting the most winners, are you serious? Typing takes so long? Get voice to text. Yeah, but that's just a picture. Okay, you do whatever you want. How's that? You do whatever you want. Don't let me bully you. But I will tell you, from 4 years of teaching people to read these indicators, that the people that take the time to write on their charts know why they're doing what they're doing, and they don't repeat. How is it a top? Did the market reverse? That's like saying that this was a top, but it wasn't. Or this was a top, right? But it wasn't. Everything says up. That could have been a top. It just has the potential to stop the market. That's all it is. All right. You do you, man. Nobody's ever obligated to listen to me. Nobody's ever obligated to trade the way I teach. Nobody's ever obligated to study the way that I suggest to study, guys. Everything that I do is based on 4 years of working with new users, 4 years of helping people get results, 4 years of putting people on the path. But everybody learns differently. And if typing takes too much time, well, then you're just going to stress out about typing. Don't want you doing that. Don't need you stressed out about typing. As long as you know why you did what you did, we're good, right? That's okay. Slow typing's okay too. But if I go back, and my job is to study these, to get good at these, to recognize these, then every time I click on a picture, right? Every time I click on a picture, I'm reinforcing why I did what I did. Yeah, that's a lot. So take your trade belt, and here's the deal. Take your trade, right? Take your entry picture, take your middle of the trade picture, take your exit picture. And then when you're done, you don't ever have to respond to me in the room. You don't have to give me a play-by-play. But when you're done, take your last picture and then type on it when you're done, when you're not in a trade. You're absolutely right. If you try to annotate every chart in the middle of a trade, you're going to miss your damn trade. And you definitely don't have to give me a play-by-play, because once you show me the last picture, I'll give you the entire play-by-play, right? But my goal, and the reason that I talk about it, and I see how the confusion came in, is because I want you to go back tomorrow. And this is one of the ways that I found people get to where they want to be the fastest, is every morning, go back tomorrow. Yeah, no, I love it. I like to see what happens after. Otherwise, I'd get 7,000 pictures in this room. I'm the same as you though. I take 4 or 5 pictures per trade, easily. Easily 4 or 5 pictures per trade. But I only annotate the last one. That's the one that I save. That's the one that I study. I'll even go back and I'll delete some of them. But the idea is that every morning you go back and study it and you ask yourself what worked and what didn't work, and what was good and what was bad, and why did I do what I did? Got you for 20 bucks. So what it did is it came back and gave you your entry. And then this right here, that little fight, did you notice that it pushed it right back to a mid-band right inside of the triggers? With odds favorable, momentum, and room to the target? That's an entry. And your brain will get to that point. So this is where I would annotate the chart. I exited at the entry with the rules met for the high probability trend trade, because you'll be less likely to do it next time. And if you use that cool little KISS plan in at 55.7, you would have been paid $100 right here at 56.7, $100 in your pocket, and then break even on the trade, and then you're out break even and you make the decision, and that's where the KISS plan comes in, right? Yeah, busy typing. It's that damn typing. Good stuff, Bill. We're gonna have fun working together. All right, Z Robot. Thank you for posting. Let's see what we have, man. Entry inside big triggers. Exit in fear. I'm gonna say that was intelligent. Z Robot, can we annotate this chart together? And man, awesome for posting. So I'm going to start with momentum. And things that are going to confuse you when you go back and study. You don't need this arrow or this arrow. You don't need this arrow. And it doesn't matter what happened back here. Because honestly, your trade is right here. Does that make sense? Your rear view mirror works amazing, but your trade is really right here. And the one thing that you had is you had odds favorable momentum all day long. You had strong triggers. It was amazing. You had rule 1 met without questions. Does that make sense? Because the smalls are above the large are wide. Awesome. And then once you have that momentum, you have to ask yourself about the path. Is it a term? Well, a termination means that price reaches a key area, a line if you will, and the triggers in this case remain below. So this impact on the fib right here without triggers that are on the other side of it, this is your giant red flag. And this says, hey Z Robot, let's pump the brakes. Let's pump the brakes. Let's not trade into this area that may stop the market. Let's just take a second. Let's wait. Let's see what happens. Does that make sense? And everything that you do in the beginning will be defined on this chart. So let me continue with the annotation. So rule 2 is not met. And at this point, you can just stop looking for the trade. You can say, man, I don't have anything to do. And I'm telling you that this is one of the easiest ways to keep yourself out of trouble, is if every time you look at your large chart, you address these two things, momentum and path. And then eventually, it'll change a little bit. But what it does is it says, there's just no reason to jump in. There's no reason to take this trade. But I'm going to keep annotating. In rule number 3, and this is where I come in and I say silly things like language is important. Rule number 3 says that I'm going to buy a pullback, and that's exactly what you waited for. So good job on the pullback. I'm going to buy a pullback at an area, and that's going to be fibs, mid bands, or yellow 121s. And here's the most important thing. Inside of favorable large triggers. So at your entry, you got the pullback into the triggers. And good on you for catching that much of the lesson. You took the pullback to the triggers and you're like, hell yeah, rule number 3, look at me go. This is awesome. And the one thing is that there's your line right there. So you were just a little bit early. Do you see how you were a little bit early? That's the only criticism. I mean, rule number 2 wasn't met. But on your entries, let it get back to that line, because it's not the triggers that create the bounce so much, but rather the areas inside of them. And what that's going to do is that's going to decrease your risk a little bit. And it's also, check it out, going to give you a little extra room to get back to that trouble. Does that all make sense? And now it's just rinse and repeat. Um, and it's this idea of annotation. So Bell, that was for you too, I guess. Anybody new in here is here. I'll give you the link to it. I'll give you the link to my markup. But this is the way, and you can do it post trade. But this is the way, because you're going to come back and study this, and you're going to see it, and share that link. And you're going to be able to go through it, and you're going to hear my voice in your head, and I'm sorry about that. But you're going to go back and you're going to say, man, when I start talking to myself about momentum, a clear path, and an entry area, I don't make as many mistakes. I don't lose as many trades. And it's pretty cool. Your cat likes my voice. I love that. And this is why I believe in annotation. This is why I'm such a firm believer in annotation. And the more pictures you take and annotate, it's funny, this only has 3,700 pictures on it. This is a newer computer. I had my laptop open yesterday, and I had 9,000 pictures in my screencast there. I'm a firm believer that the easiest way to get to where you want to be is to take pictures, to annotate them, and then just drop them in the room and let's have a discussion about them. And I never get tired of the same question, guys. I never get tired of the same question. It doesn't bug me to go over the same lesson. I want to see everybody posting. I want to see everybody asking. And the cool thing is that if you have a different point of view from my answer, we can have a conversation about it. I'll tell you exactly why I think what I think. And I will support it like we're in a court of law. And all I ask is that if you fight me, do it with facts and not emotion. Don't tell me that it's bullshit because your trade lost. Let's talk about those three simple rules and those three advantages. And guys, I have so much fun doing this. And I don't get to do it if you don't post anyway, so I really need you guys posting. I've got a couple minutes. Anybody? Belt, let's see what you got, brother. Belt's like, check it out, Mark. Everything still says up and it has the potential to break. So I'm going to jump in a little early. And then I'm going to get in right there. That was the, oh, that's too soon. And then, man, this is cool because this is yours, Z-Robot. Look at the entry right there at the line, right inside of triggers. And it gives you that room, right? And it lessens that risk. Belt, this is awesome, dude. This is awesome. But this is the exact same look, right? And the cool thing is, and I want you guys to see this, your large chart says 50-50, Belt. Your small chart looks like just total termination condition. This is why we let the large chart triggers lead the way, because it sets you up for making a little cash right back to trouble. Nice job, dude. Really nice trade. And Z-Robot, isn't that cool? Just that one little nuance. That one little nuance changes the whole game and reduces risk and gives you room back to the targets. And it's kind of cool that I showed it on your chart. And then he just came back and said, oh, by the way, Mark, let me go ahead and execute flawlessly exactly what you just told Z-Robot. Belt's showing off a little bit right now. He's like, I've been here 4 days. I'm going to show you how it's done. That means nothing to me without seeing it. Super newbie, but you're killing it. You're killing it. And the best thing is that you're going to wear a hole in your simulator practicing this stuff. And that's the key, guys. A lot of people get really scared. I don't want to be on simulator. I don't think I know it yet. Wear it out. Practice moving targets. Practice moving stops. Practice putting in manual stops and targets. And you know what's fun too? In Belt. Oh, that you didn't see it, but you're still down money. And that's okay, right? We're on simulator. One of my favorite things, and you didn't do it here, is people will show me a winning trade and then they'll show me that they're down $500 even though they just made $1,000. And people love to hide. They love to hide losers. And I'm not saying that you did that. So termination condition, I feel obligated to point that out. Price reached a line, triggers haven't broken. It's one of the most dangerous things you can do. And then, why is your limit order outside of the trigger lines? Why is it on the wrong side of the correction point? What makes you believe that you just moved it up? Awesome. This is going to move up. Too much. It's that damn typing again, Belt. You're so excited to show me what you're doing. But you know that I'm going to talk about whatever I see, right? So if you put your limit order in the wrong spot, I'm obligated to talk about it. That's what makes the class work. Is I'm extremely honest with you guys, and be honest with me. And we'll all get to where we want to be. And guys, I'm going to call it a day. I'm going to